Good morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host P. How goes it, P?
As always, it goes fantastically. Can't stop thinking about this fucking White House conference on food and nutrition, which is going to be one of the news stories we're talking about. But you know what? Before we dive into that, Q, can you take us through our topics today and what we're going to be talking about and who we're going to be talking about it with?
So we got a jam-packed Monday for you guys. The Bitcoin price is ripping, so we decided to treat you guys with another Bitcoin Magazine Pro. That'll be in the last hour today, so at about 3 p.m. Eastern time. I don't know. I'm on the West Coast. And before that, we'll have an interview with none other than Troy Cross. And of course, to kick things off, we've got news and notes with the two of us, as well as Chris, QPC, as we like to say. So jam-packed episode, and we'll just dive right into it. They told you inflation was because you were eating too much meat. They told you it's time to start eating fake meat. They're starting to do research on plant protein. Now they're going to look you in the eyes and tell you that Honey Nut Cheerios and Frosted Flake or Frosted Corn Wheat, whatever, all these sugary ass cereals are apparently better for you than eggs. Let me tell you, I had some poached eggs this morning and they were delicious. And no way in hell is anyone, scientists are not going to convince me that eating a bowl of sugary cereal is going to be better than eggs. Poached, fried, whatever, however you like them. How do you like your eggs, P?
Oh, definitely over easy or poached with little bits of bread dipped in them. That's the only real way to eat a, a semi-hard egg.
Ooh. I'm an over easy guy
a chub,
myself,
if you will.
Personally.
A half chub egg.
God damn it, P. It's too early for this. But so what are we referencing here? So
Of course.
Shout out to Nina. I'm so sorry. I'm going to butcher your last name. Tychols. She shared a graphic from the limitations of the Food Compass nutrient profiling system. This was a paper created by the man who is leading the White House Conference on Nutrition in September. I believe we have this chart up now. If we can just zoom in a little bit, gives you a sense of what foods in the green are to be encouraged. At the top of the list, watermelon and kale. Okay, fine. That checks out. At the way bottom of the list, you have ground beef. What the fuck? Cheddar cheese. This person must really hate themselves. And then a whole egg fried in butter. All right, this person just clearly woke up on the wrong side of the bed and wants everyone else to be as miserable as them. I'm going to... Sorry, go ahead.
No, please continue.
I just want to point out the fact that somehow things like ice cream, M&Ms, Lucky Charms, eggs cooked in vegetable oil, i.e. seed oils, deemed better than butter. You also have orange juice, all sugar, chocolate covered almonds, because chocolate's good for you, as the study by the chocolate conglomerates found. Surprise, surprise. My personal least favorite, non-fat anything. And yeah, that unsweetened almond milk, which is so good for the environment given how much water it takes to actually produce 1 cup of almond milk. So I've listed some of my grievances here. We're going to, I think, just beat this list up for a little bit because that's the kind of mood we woke up in on a Monday morning. P, where should we start?
Yeah, so I wanted to go into a little bit more detail on exactly what we're talking about and what's going on here. So there is a White House. They've announced they're going to do a historic conference on hunger, nutrition, and health. Talking about a task force of leaders. One of the people who is leading this task force and who is advising the White House on what effective nutrition looks like in the United States to create better outcomes for all of its people, blah, 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 is a man named, oh no, it's gone. There we go. A man named Dariush Mazafarian. Now, he is known for... Dariush, there we go. Now, he is known for, among other things, creating the Food Compass system. And he published a paper in 2021, basically arguing that this system was an effective way, a more effective way to categorize, the viability of foods than the existing food pyramid, which is also bullshit. And his system produces the rankings that we were just talking about. So this is the person who is currently helping to build the White House Conference on Nutrition is a person who has created a system that produces these results. Yeah, man. I mean, you knocked it out of the park. I mean, this is fucking ridiculous. How the fuck are frosted mini wheats above basically everything else except for watermelon and kale? Watermelon and even kale are not the same thing. Like, obviously, kale has a ton more nutrients, although watermelon is good for you as well. But even, as you said, like, this is just straight big corn syrup trying to shove its meaty hand up through your asshole and out of your mouth and make you pup at the party line. Yeah, it's hilarious. Chris, what are your thoughts?
I'm just looking at this in general, looking at like an egg is a third of the nutritional value, or at least that's what the graph looks like, of Honey Nut Cheerios or something, or like Frosted Mini Wheats. It's like less than a third is wild. I don't know. I agree. And it reads like an ad. I think, Pete, into your response, I sent the Truman Show. Remember when they're like, and remember to get your blender from, like, it's like almost like an ad, like in something that's like government propaganda. That's
for sure
what I thought of when I saw it.
I love that scene where like he's freaking out and he's like, he's like sitting at a table or something and he's freaking out and he's like, what is happening right now? Like I'm having this existential crisis. And his wife is like, would you like some
beans?
Chocolate milk? No, it's like chocolate milk, the best thing ever. And he's like, yeah, totally. I agree. It's insane. All right. Moving on.
Oh, fine. All right.
No,
moving
go
on.
for it.
No, I mean, to Chris's point, I just wanted to highlight the fact that like it's not even specifying just like a broad basket of cereals. It's literally Lucky Charms or Honey Nut Cheerios, like almond covered M&Ms. Like they are specifying certain brands while then keeping it broad for others. So
yeah, the one thing is like chocolate almonds, but it's like literally like almond M&Ms. You're like, what are you talking about?
Like, dude, I know that the almonds in the M&Ms are like the worst almonds humanly possible.
Shit almonds for sure.
Anyways,
so
all right. We
should go on.
Well, I wanted to keep it on food related for a second, and then we'll go over to the Bitcoin of it. But a lot of this relates to many Bitcoiners. I mean, the whole seed oil disrespecter movement has been a really, I think, eye-opening process for a lot of people to learn better about what's good to put in your body or not. A lot of Bitcoiners over the weekend had great pleasure in seeing this video circulate around Twitter of, I believe, a bar in London or in the UK is accepting vegetable oil as payment for beer because there's a ration and a shortage of vegetable oil, as though humans actually need more seed oils in their system. I just thought it was hilarious that seed oil is now a means of a medium of exchange before Bitcoin is, to steal Joe Consorti's line.
Is it vegetable oil or seed oil?
Sunflower oil.
I see. Got it.
So
they need it for the fried pretzels or schnitzels. So you beer in your schnitzel. But,
that's right. It was Germany because of schnitzels.
In Munich, yeah.
Yeah, but I mean, I think this is a little bit of a Pandora's box that's getting opened. You're starting to see people get really creative, much like they did in 2020, where like a lot of millennials like myself went into mom and dad's house. Some of us never left. But we started digging into our old stuff and found like the Pokemon cards we left or whatever collectibles we had. And people started just like selling them online and making some money here or there and introducing almost these new marketplaces, new forms of money, if you will. This is, I think, more to come. Dude, I'm telling you, like, not financial advice, but when sriracha is not able to produce as much sriracha, what's going to happen to the price of sriracha? And just wait, your local restaurant is going to run out of sriracha bottles and they're going to say free appetizer if you bring in a bottle of sriracha. Just wait. When it happens, someone tag me in a picture when you see it and post it on Twitter. You laugh, but I've said more absurd things that have come to fruition on this show. Bitcoin miners seem to finally be capitulating, or at least that's what this clickbaity title on Coinbase or Cointelegraph was telling us. Really, what they're pointing out, as many of you guys have realized, is Bitcoin is pumping. We're getting a little bit of price moving up. I believe we're up 10% since Friday, about 6% in the day. So we're getting a nice little, some may say dead cat bounce. I will say that. Others may say it's the new bull market run. I don't actually know, but time will tell. One thing that is worth pointing out is we are coming up on the 200-week moving average. So this was used as sort of a level of support while we were coming on this downturn that we quickly crashed through when we went all the way down to 17.5K. We've still been floating below this line, and I believe we are still below it now. So just something to keep an eye on. I believe the exact number is 22,600 is where the 200-week moving average is. So should we see a break and hold above that level, you could see a nice little, a further run up, but you could also see rejection at this level. So something to just keep in mind for my other astrology-loving technical traders.
You and your price talk.
So guys, I want to get your thoughts on this. I've been thinking about this, the Bitcoin miners selling a lot recently over the weekend. I was thinking in the long term, does Bitcoin miners, are they basically always like at a fixed rate? So meaning in 108 years when the block reward's only like 37 sats, is it like, oh, the energy they put in is 30 sats, they get 7 sats if they win the reward? It's like almost like the perfect dividend stock, that it's like your energy is cost in sats, and then your output is obviously the block reward that you're getting plus fees. Is it like, okay, like we're setting our margin at 7% or 7 sats, and then anything above that is fees that we're getting is like, the dividend, and that fluctuates, and obviously you're not winning every block. So I've always wondered that, like, you're trying to look for free energy, obviously. So the net goal is to get free energy so your miners can run continuously. Obviously, they'll break down, fans break, they overheat, they need to be replaced, wiring, all of that needs to be fixed over time. But like the 7 sats will be like, okay, that covers our operating costs, and then anything above that of the fees or whatever it may break down in the future of hyper Bitcoinized world 108 years from now. I've just kind of wondered if they're like the ideal dividend stock or basically company, because it's like, okay, we know our input of our cost of electricity is free or near zero, and then we have to pay an operating cost, and then the sats that we get above that is like what we can distribute to shareholders or new operations and such. Do you kind of see the logic I'm going down? Because right now we're doing this weird thing of priced in dollars into sats, and obviously as the US dollar price goes down, they can be underwater. So it's like you either take out more debt in the fiat sense, or you kind of see where
I get what you're saying. Here's the issue. And the truth is, neither you nor I are living off of dividends in the way that there are genuinely businesses built off of the backs of guaranteed money and dividends. And that is the issue with what you're describing, is that it's not a guarantee that you're going to win the block. It's not a guarantee that every month you're going to get this many number of transaction rewards that are then designed to be your dividend. So I get where your head is going, but I think part of the issue is the fact that dividends are,
I guess the one thing I'll say, like, even like Apple has amassed they are a tech company. They are very much like a cultural company as well. But like even now they give, 0.7% of the stock price in dividend. It's because Apple has so much fiat that they don't they have 200 billion on their cash or cash equivalents that they can deploy. Like they can't iterate fast enough on the iPhone or products, especially with chip shortages, that they now have to give a little bit of the cash back to incentivize people to buy the stock. Obviously, I know it's not like one of the Exxon Mobil or even like cigarette companies that give a high dividend by percentage basis, but it's almost like they have so much cash they don't even know what to do with it. They can't even redeploy it fast enough for new technologies. That's how bad it is. I see with what you're saying, Q, though.
but like again, those businesses you described have such a established cash flow system. But the perfect example of this is the hiccup that the airlines saw in 2020. Like those were heavy dividend paying companies that also do a lot of stock buybacks and play with their sort of fiat accounting systems. And in turn, what happened? They weren't able to pay dividend. They weren't able to do stock buybacks. They started running the risk of potentially having a bankruptcy, and then they got bailed out. So if that is something that is worst case example of what happens when you don't meet the threshold of what you need to then pay your investors a dividend, I don't want to even explore that opportunity, because then you're reintroducing potential fiat accounting measures, and you're potentially reintroducing something like a bailout or the necessity of a bailout, which I would rather just see. I would rather never see again in my lifetime. If no company, if no country ever got bailed out again in my lifetime, I would be fine with that. Maybe I'm a terrible person. Don't stay on me for so long after I say something so awful like that.
No, I guess, yeah, it's just kind of a thought that I was running through. And this is going to take, like I said, 108 years is when the block reward's 37 sats. So we will probably not see it, but I'm just kind of speculating on the future. Yeah, that's pretty much my 2 cents. I like it, Q. P, anything else to add there? I know
Nope.
you're a financier. I know you love the stocks and equities and such.
It's
You're
true.
a dividend man.
So,
Only sats, though.
well, let's ask P this. Will Bitcoin close higher or lower when I go to sleep tonight than where it is
You mean
now?
from where it is now? Lower. Maximum pain.
P, I actually have a question for you then. So right now it looks like as Bitcoin is hyper Bitcoinizing, like it looks like a good trade over the next 10, 20, however long years. Let's just say that like Bitcoin companies or regular companies are now like, oh, we don't take fiat, we're only Bitcoin companies. Will you invest in like a stock or an equity of like, hey, with future returns of sats? And like imagine the whole S&P 500 is the top 500 companies are all like, our balance sheets are in sats. This is what our top line revenue is minus the bottom line, like the margin.
I mean, I don't think that's going to happen though. Like,
I know you're an old man, so maybe not in your lifetime.
Yeah,
but
yeah,
like
exactly.
Technology is moving on that you might live 300 years from the 100 age that you already are. So like it would be pretty sweet.
I mean, you're talking about, I think what you're talking about is an exchange that was denominated in Bitcoin versus USD. And we're like all the,
not necessarily like company, like I guess like MicroStrategy is like they're no longer using the USD. I guess it is the exchange, but like a brokerage account that's like these companies are Bitcoin only. Their stocks are, it's not even a USD price.
Yeah.
It's like they've got 1 million sats on their balance sheet, less 500,000 for
I
expenses.
I think that that will certainly eventually happen, but I don't think that's like, I mean, maybe it is 10 to 20 years. Things always happen faster than we initially planned for, but there was so much stuff that would have to happen before that. I've just been rereading The Mandibles, which I don't know if you've read that before, but
oh, Dell keeps hounding me. I need to read it. I
it's
haven't.
so
He's like literally just
good.
will like message me like Mandibles. I'm like, what the heck, dude? I know it's on my list.
Yeah. So for the audience, The Mandibles is a phenomenal near future. It's like economic fiction, but basically it takes place in a world that we are potentially headed towards, where the U.S. dollar loses its reserve currency status, and the U.S. defaults on all of its debts, both internal and external, and it's about sort of the descent into hyper inflation. And the book does not mention the concept of Bitcoin, but it is very, very chilling and very well written. So I just think that there's so much like crazy stuff that's going to happen before the U.S. allows a brokerage or an exchange or something like that where it's denominated in Bitcoin. Now, outside of traditional systems, like you absolutely could do that. I mean, there are certainly Bitcoin only investment funds. I believe they still have to write all their books in terms of U.S. dollars, but I think there's a middle ground that we'll reach before we get to a hyper Bitcoinized world.
Yeah, and the GAAP accounting, for those that don't know, it's called GAAP accounting. I forget the acronym that stands for, GAAP.
Generally accepted accounting principles.
Yes, exactly. And right now, when the value in USD of your Bitcoin goes down, if you hold it on the balance sheet of a company, you have to write it off as a loss on your income statement. So literally you have to be like, oh, if Bitcoin went down by 50% and you had $1 billion, you have to find $500 million to be like, oh, I need to net this out of my income expense. But when Bitcoin's price appreciates, you don't get the gains of it. So you're like, oh, I still have this loss in let's just say last year in 2021, I have this loss that I'm accounting for, but I can't say, no, now my balance sheet's healed, or I get it on the appreciation. So obviously Michael Saylor and those alike are trying to obviously change those standards to allow for, if it goes down, you claim a loss, but if it goes up, you can bump up your books. But that remains to be seen. Q, last time I checked, I think MicroStrategy is still 600 million negative. So their stock is at 1.8 billion, where the Bitcoin on their balance sheet is valued, even with the price going down, at 2.4 billion. I know that number was getting a little bit closer as the stock was falling in parity to it. But yeah, it's very interesting that it's 600 million less than if you only take the Bitcoin. That's not even including their business, any real estate they own, X, Y, and Z. It's pretty crazy.
Yeah, I mean, like when we first talked about this, when that inverted, essentially the value of MicroStrategy's Bitcoin became more than what their market cap was. I think the theory that I threw out was, well, they're probably discounting some of their Bitcoin because it's on leverage. I'm trying to find right now, but I'm hard pressed to believe that they are so hyper levered that they could actually denominate $600 million worth of Bitcoin as negatively valued. That would imply that, I mean, to make the math really easy, it would be they have $1.2 billion of Bitcoin that's 50% levered.
That's interesting. Yeah, I definitely need to look into that for sure.
But I mean, look, this was a profitable trade for a little bit. None of this is financial advice. We're not telling you what to do. Like, it's a bear market out there. Like, believe whatever you want, read the tea leaves, listen to your favorite person. But if you don't do your own due diligence, you're just dumb. That said, stack stats, stay humble.
I got one more thing for P. I got a question for P. So Q, you were in during the last bear market, but you weren't really a Bitcoiner. P, this is your second bear market, right?
Yes, although I actually was more similar to Q's situation. I had been building options trading bots on equities and got interested in Bitcoin because I was like, oh shit, it's super volatile and people want it, and so I was like fucking around with that. And it wasn't until but I was tracking it extremely closely, market sentiment, everything going on in there. And then it wasn't until 2018, 2019 that I was like, holy shit, this is game changing technology. This changes everything.
Yeah, so I guess I have one quick question for you then, Pete. So I know you've brought this up before. It's like you've kind of brought up the idea of managing your cash flow. So someone that this is their first bear market, maybe we're at a bottom, maybe 50% is going to fall out from underneath us. What would you recommend aside from stacking sats on a regular basis? Not financial advice, but that's what you would recommend. What else would you recommend for someone that's going into a bear market and doesn't know which way is up, or what's coming next, basically? I know that there was the Get On Zero crew that was saying like, you're like, I'm only on 100% Bitcoin, but obviously
no, I've never been
going down. Yeah, I know you're not, but
that's never been something that I would recommend to anyone. I mean, you already touched on it, I think, a second ago. I think it's about managing your cash flow, right? Like, first of all, you should never put more into anything than you are comfortable with and confident in your conviction, right? More than that, you have to make sure that whatever the outcome, you have a way to maintain your chosen lifestyle, and that you're able to support your medical costs and your family's medical costs and your food costs and all that stuff. So the biggest thing is, get a side gig, figure out some hustle where you can make more USD so that you can weather these storms more effectively. But I definitely do not think that anybody should be like 100% into Bitcoin, because the reality is, you're going to have medical expenses. I mean, unless you're like an OG from like fucking, 2010 and you never sold Bitcoin and you just have so much it doesn't even like phase you at all, and you can just sell Bitcoin as needed to do your thing. But that's not realistic for 99.9% of people. So just manage your cash flow, have income streams that allow you to weather the storms, and continue DCAing.
I also love, this is probably one of my favorite Greg Foss quotes, and it's not one that's often used, but the worst allocation to Bitcoin is a 0% allocation, and the second worst is a 100% allocation.
Oh,
That's just my 2 sats. That's just my 2 sats. I never believe in going all in, nor will I. My dad
had
the
All In podcast, though, Q. The All In podcast, dude. Chips in.
my dad had a long talk with me when I was going over my portfolio with him on Friday. He was like, wait, your allocation is really bad right now. Like, what are you doing? I'm like, just trust. He's like, you're an idiot. So who knows? I want to hit a couple of stories real quick before we cut to a commercial and are joined by Troy Cross. All of your models that are dead, my model, your sister's model, your nephews, uncles, brothers, cousins, twice removed model, everyone's models, Dylan LeClair's model, all
Plant
dead.
Bees is still alive though, right, Q? You're still on
Yes.
that train?
But so Bloomberg posted an article saying the once hot strategy of holding Bitcoin overnight loses some luster. Essentially, I guess there was some sort of strategy where you could buy at the close and sell at the technical open, and that was somehow garnering money. And trade is no longer making you money, or at least as of last week. Yeah, more death to models to come, to say the least. But that's really all I had there, unless either of you wanted to chime in. Nope. Cool. All right. The last story we got is Bitcoin will be part of every portfolio, says former BlackRock executive. Yeah, no shit, bro. Welcome to the club.
And scene.
Before we cut to a commercial, I want to remind everyone tickets for Bitcoin Amsterdam are on sale. Ticket prices will be going up on Friday. I'm working right now to create an exclusive event for like a hot box sesh with me in Amsterdam. So stay tuned for more details on that, but lock in your ticket now before ticket prices go up. And if you want this sweet Don't Feed the Whales shirt, you can get it at the Bitcoin Magazine store. Use promo code BMLive to get 10% off of that and everything else in the store. Let's cut to a commercial break and we'll be joined by Troy Cross. So sorry about that.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Stand by.
What is up, guys? Welcome back, and thank you for sticking through that commercial break. P, can you introduce our next guest?
Abso-fucking-lutely. Troy Cross is a fellow at the Bitcoin Policy Institute and a professor of philosophy and humanities at Reed College, where he teaches courses on time travel, philosophy of religion, color, and philosophy of mind, as well as lecturing in the humanities program. Prior to going to Reed, he held positions at Yale and Merton College, Oxford. Cross's philosophical research centers on foundational issues in metaphysics and epistemology.
Epistemology.
What?
Epistemology. No, you got it.
Epistemology. All right. Epistemology. You've also been involved in Bitcoin for over a decade. You were mining Bitcoin like way the fuck back in the day. You have blown a ton of Bitcoin buying socks made out of alpacas. And you are an expert in the environmental aspects of Bitcoin and the considerations therein.
Man, that is quite an intro. I sound like a fiat academic, I have to say. With all that, yeah, I'm a philosophy professor. I'm on a leave right now just to do Bitcoin stuff. And I'm really pleased to be here. Thank you so much for having me. I love talking about Bitcoin, especially with you guys.
Amazing. Yeah, you and I have had many conversations over the months in Twitter Spaces, and I always am super impressed and enjoy your thoughts.
Thank you. Feel the same way.
You're too kind. Fun fact: I was accepted to Reed College, and I was like this close to going there. And the reason I decided that I needed to go to Reed College was because it was one of the only, I think it was the only university in the United States that gave undergraduate access to a nuclear reactor. And
Yeah.
I went and I saw the I think was it the Rayleigh scattering from the blue glow coming out of this giant, like 30-foot deep pool. And I was like, I have to be here, obviously. Am I interested in nuclear energy? Not particularly, but I will become interested.
Yeah, the reactor is awesome. It puts out such a tiny amount of energy. It's like minuscule, really. They use it. They don't use it to power anything. They use it to, create materials for other experiments. But yeah, it's the only student run. It's not just that students have access to it. It's that students actually run and operate the reactor. And you have to get training for it, and then you get certification. Like when you graduate, you're like a certified nuclear reactor operator if you go through that program. And that's kind of how I know a little bit. That's kind of gives me some insight into nuclear as a I guess as an energy source and a Bitcoin mining possibility, because I always have students who are in that program, and I get contacted by the federal government like twice a year with these vague and weirdly intrusive little notes like, do you have any information that we should know about so-and-so? And then they list my students who are working on the reactor. And I'm like, well, what exactly are you looking for? And anyway, I wrote the administration, like, what are they looking for? And they wrote the agency that oversees it. And that agency gave some information about what they're looking for. And it's also just like super open-ended. It's basically, I'm a spy on my own students on behalf of the government. Like, what are you doing with this information? And I realized that, like, since we get visited by the, whatever it is, the Atomic Commission or whatever, and I get all these notes that nuclear, I'm a huge fan of nuclear, basically for its basic physical properties. I think nuclear is the future, but I am somewhat troubled as a Bitcoiner by how in your business the regulators are for this tiny little reactor that can't even power a light bulb. And so the dream of, like, just all Bitcoin mining being done on nuclear reactors, there's some tension with it also being decentralized, because I think it is the most heavily regulated and spied upon form of energy production that there is. Okay, that was way more than you wanted to hear, but sorry.
No, I like
all of it.
This actually, like, my first question at the moment, I've never heard of Reed College having a nuclear reactor. This is news to me. You learn something new every day. That's the thing I learned today. What I genuinely wanted to ask is, so why doesn't the federal government reach out to the professors or the students there to understand more about nuclear energy, because it's being tested and worked on a daily basis? And lo and behold, of course they do.
They do.
And of course they ask the wrong questions. But why is
you can see why they do it, right? Nuclear proliferation is identified by many people in government as the number one threat to security, the safety of humanity. And think about where we're coming from the Cold War. That was obviously top of mind for literally everyone. So when these regulations were first drafted, we were just concerned about nuclear proliferation. And, we have a lot of students here from all over the world. And the thought is, it's obvious. You're going to learn about nuclear energy, and then you're going to take it back to wherever you're from. You're going to build a bomb. They're going to use it on us. And then post 9/11, things got amped up to another level. So, I think I see exactly where it came from. It's like, basically, like, imagine a flight training school and the government's up in your business, and you're like, after 9/11, I can kind of see why they want to know this stuff, because it was a failure to keep tabs on that looked utterly stupid afterwards. But this is exactly how the surveillance and security state becomes a behemoth. Each one of these things is like a one-way ratchet. You have a security threat. You address that security threat. You don't want to be the bureaucrat who doesn't surveil hard enough, and something slips through your grasp. So you always overreach when you draw the legislation in response to that. And you basically, like, look at what we have to go through at the airport now. Look at, like, how our lives are so guarded in these stupid and inefficient ways. And you're like, how did we get here? Well, we got here because people brought knives onto a plane and hijacked it and flew into the World Trade Center. That's how. It's like, okay, I see it. So I'm not like I'm
TSA
not. I
apologist.
get it. Like, I totally get how it happened. It's just that here we are, and where we are now is really. I think, it really sets us on a path. And who's going to undo it? Who's going to be like, we should stop checking in with Reed profs about their students and asking whether they're decent people. Like, no one's going to do that.
No, it's never going to happen. It's I think within our lifetimes, we're going to have to strip entirely naked, like cover ourselves in petroleum jelly and like slide through like an organo-mechanical orifice that's
Wait,
like a giant
Pete, you're
penis
telling me
in
you
order to get
don't do
scanned.
that when you go through TSA? You're as dark as I am.
Look, I'm part of the extracurricular program at the TSA, but you and I go through that. But most people don't know about that yet. They don't know that's an option.
I think
You can
somebody
pay extra
actually
for it.
did in the Portland airport where I live. Somebody did strip down going through TSA in some kind of protest, made local news. So
Honestly, I kind of love it. Troy, there was something that you said though that I think feeds into what my belief around a lot of this nuclear stuff is. And it's the idea that, people of a certain age, you and Pete, no offense, unlike me, grew up in the Cold War era, hearing about it and like really feeling this fear around a potential nuclear war. You guys also were alive during Chernobyl. I mean, Pete was an old man then, just you can see how old he is now. But like, these are not events that necessarily feel very close to me. Like, I hate me all you want for saying it like this, but it didn't really click in my head until I was much older that Chernobyl was not very far removed from when I was born. And I wonder if part of this hesitation to adopt or go and explore nuclear energy is because the leadership, the people who can make those decisions, were in fact alive during that time and biased to a point of fear almost, rather than through a viewpoint of opportunity or prosperity that this new technology could provide. How much of that do you buy, or am I just still a little high from the weekend?
Yeah, well, I mean, first of all, Pete doesn't look half my age, but yeah, I did live through those things. And I remember the Berlin Wall coming down. And my mother grew up in Washington, D.C. And when she was a little girl, like, her big fear was thermonuclear war. That was the era of Dr. Strangelove and the Rand Institute. And I think, of course, that shaped us. But on nuclear safety, it's more than just the Cold War shaping us. It's, on the one hand, the proliferation of nuclear weapons. I mean, I think it is a concern. Nuclear weapons are definitely a concern. I wouldn't say I'm unconcerned about that at all. In fact, what's weird is that we were a lot safer in the Cold War, I think, than we are now on the nuclear war front, because it was just in the hands of two superpowers, both of whom had a lot to lose. Whereas now it's in the hands of a lot of rogue actors, and it's a little less secure. But on the part of nuclear energy, there was, of course, a huge movement that kind of coincided with the Cold War. It wasn't so much about geopolitics as it was about meltdowns, like Chernobyl, the plant in New York. It was these little accidents, and it was also about what do we do with fissile material, spent material, and not having a really good place to store it and having a long half-life. And of course, you do remember Fukushima, I hope. That's an ongoing disaster. I made some money on that in the prediction markets. I made good money on Fukushima.
Oh yeah, wait, go into detail. Tell us how.
Well, it was on this prediction market in Ireland, which has now been closed, and you could bet on basically the scope of the disaster, like how big was it, and how large would the disaster area be declared, and at what level. And I made two calculations. First of all, I calculated the government was lying and it was worse than it was, and that was true. And then my second calculation was just looking at the rings of devastation possible, that some of those larger rings geographically encompassed large population centers. And I knew they would not evacuate those population centers. Like, I just knew it, like, basically no matter what, because it would just be too much of a pain. So I bet that the circle would be bigger than they were initially saying and smaller than these outlying ones. And I bet like I bought up the whole market. I mean, it's not a big market. So I just like bought up every available trade. And I felt weird about profiting on nuclear disaster, but information, the market is there to get information. I wanted to give people information.
Absolutely.
Yeah. That was pre-Bitcoin, by the way, I think.
No.
I can't remember. No. When
No,
was Fukushima? What was I already trading Bitcoin? Yeah, maybe I was. Okay. All right. Whatever.
Fukushima was 2011. But by the way, none of this is financial advice.
None of this is financial advice. Do not bet on. Anyway, the site is shut down. It's like a gambling thing, like anything centralized, right? It's free market and it's going to get shut down. But anyway, back to the question. Like, I think these disasters and the problem of long-term storage, it galvanized a movement that went together with the no nukes movement for war, and that was like not my generation really, but like my parents' generation. They weren't really part of that, but that was the no nukes thing. And what's weird is to see how the long tail on that movement. We've got much better safety in reactors now in their design, in their fundamental design, but also in their placement, in their regulation. Like basically we have addressed the safety problems, and nuclear is by far the safest form of power production now. And that's hard to stomach, but it's true. This like the air pollution from a coal plant kills more than nuclear ever has by causing lung issues and stuff. So I think nuclear, and of course, I mean, this point's been made all over Bitcoin Twitter and all over energy Twitter, but basically decommissioning nuclear fleets around the world is what is keeping coal plants online. And for Bitcoin's critics who point at Bitcoin, which is less than $1 billion a month in total revenue, and probably $200 a month in energy spend to fossil fuels, if that, like maximum. Maybe $100 million a month is the total global spend on fossil fuel energy worldwide. To say coal plants are staying open because of Bitcoin, meanwhile we are shutting down nuclear plants that produce orders of magnitude more power around the world. It's happening like that New York state legislation. There's a plant being closed down in New York at the same time that legislation is being forwarded and discussed. There's a plant in Michigan that just got shut down. There's a gas plant across the street that is, of course, taking up the slack. So, basically, shutting down the nuclear fleet is eating up all of the gains that are being made by adding green energy and keeping fossil fuels around when they otherwise wouldn't be. Nuclear has amazing features as a producer of power. It has this incredible capacity factor. It has a very small footprint, unlike solar. It's fantastic. It overruns its budgets all over the place. It's expensive right now. It's centralized. It's regulated, but it is safe and it's steady, and it's and it's carbon free. It's not considered renewable because it uses uranium, but it's sustainable. It's a carbon-free production of energy. So like it's almost like the game with Bitcoin. It's like a distraction game. Like everybody look here at 0.0012% of global energy. Meanwhile, ignore the fact that we are shuttering the most innovative and forward-looking and decarbonizing form of energy production that humanity has ever had. It's almost like I get conspiratorial at this point. Like, who's behind this? Like, who's behind this? Because it seems just too irrational for it to be organic. But then, people are irrational.
No, I mean, I could not agree with you more. It is so disheartening to have so many people believing the lies that are constantly repeated about nuclear energy, and honestly, so many other things, but specifically around nuclear energy and its effects on the environment and what it does for humanity. I mean, it's just lie after lie after lie, and the policy decisions that are made reflect those lies.
Yep. I think it's a really, really instructive thing for Bitcoiners, because we're the anti-nuclear campaign of misinformation and the anti-Bitcoin campaign bear a lot of resemblance, but it happened a long time ago with nuclear. So we're looking into our own future when we see the present. We look at the present of nuclear, that's our future. Like we are these right now. Bitcoiners are like the nuclear advocates of the 70s and 80s. and look at the long tail of that misinformation. These a few key players, right, who have created the story around Bitcoin, fashioned it and fed it to the media, who lapped it up, into politicians who also lapped it up. Alex DeVries, who I'm going to a conference on Wednesday. He's going to be the keynote speaker there. Created this Digiconomist, the central bank employee for the Netherlands, who created the site Digiconomist, originally Doge Economist, and spread just an incredible pile of FUD about Bitcoin. Like that person, Camilo Mora, professor at University of Hawaii, didn't really write, put his name on a paper that is repeated everywhere that says Bitcoin alone is going to heat the globe more than 2 degrees. Like these two people and a few other key players at the very, very beginning of Bitcoin's life shaped a narrative that is not based in fact, but which will dog us for decades. And it's because there wasn't a counter narrative that caught on fast enough, and it's because it became an identity feature. Right? Rather than just like, oh, how does this brand new technology work, like the electricity or the internet? Let's figure it out, how it could be used to further human ends. It was, what kind of a person am I? Am I?
I know, it's
am I like, you know what I mean? And so that's the same with nuclear. It's like, once you're a no nukes person and you've got T-shirts saying that and you've protested it, how easy is it going to be to change your mind? Very, very freaking hard. Which is why we just have to wait for the hippies to die, for that narrative to die. We're not going to change their minds, right? So we got to wait. We got to work on the next generation. And so those two in particular, but others are, Elizabeth Warren, they are trying to do the same thing for Bitcoin. Cement a narrative and intertwine it with an identity so that it cannot be shed at the pain of, at the cost of your own ego.
Oh,
and
that's
admitting
such a
that
good point.
you aren't the person that you say you are. You're one of those bad people. So we have to stop it before it gets to that phase, because we're just going to be dealing with this FUD like for decades.
Yeah, man, I have said similar things in a far, far less eloquent way. That, like, the way I kind of have thought about it is when you're talking with people about environmentalism, specifically around ESG narratives, one of the experiences that I've had personally is that it is so difficult to have a conversation based in fact or reason, because, as you say, people's identities are wrapped up in this idea. And I'd never thought about the idea, or I had never thought about it from the perspective of people trying to establish that identity around Bitcoin, and certainly not around the idea of nuclear energy. But you're absolutely right. That's exactly the attack vector against it.
And when I talk to people, and I'm not very good at this, no one is, but you kind of have to work with the identity they already have. You're not going to be able to tell people like, your identity sucks. Who you are sucks. Be a different kind of person. It doesn't work that way. People don't work that way. So you have to try to get inside their head, figure out what they value, and how, Bitcoin can connect with what they already value and who they really are. The deeper values, like, okay, you've got the T-shirt that says no nukes, but what are you really afraid of? You're really afraid of, thermonuclear war, meltdowns at plants, and what you're afraid of is a kind of techno-pessimistic vision of the future, an irradiated landscape, a hellscape, post-apocalyptic. That's what you're afraid of. So if I can then show you that you are actually creating that hellscape, that the technology has advanced in the past decades, but you are keeping coal plants alive, and those coal plants actually have radiation and emit radiation, more of it than escapes nuclear plants, famously, right? So do bananas. A lot of things have radiation, but if I could show you that you're creating a world that is worse than the one that you're trying to prevent with your actions, and do it with empathy, maybe we get in. But like I said, the hippies have to die. I say this with affection. I mean, I'm at Reed College. It's basically like, you know what I mean? It was like hippie central, I think, 30 years ago. Oh my God.
Yeah, it's so I'd love to hear more of your thoughts around how you combat those narratives. And I guess also, taking a step back, sort of what is your position on kind of ESG narratives in Bitcoin and how we can.
I'm going to cut you off, P, because I want to go down the ESG rabbit hole, but I want to go a different way because Troy, what you said, I agree with. However, then you look at something like ESG, where at its core, it is essentially just telling people, hey, what you've done for all these years is bad and stupid, and you have to change it. And this is what you have to do differently going forward. And for whatever reason, a lot of people bought into this narrative. A lot of it was pulling on the heartstring of finding what these people valued. Like, hey, your kid is probably not going to have the same planet that you have. Like that was like the advertisement running when I was a child. Somehow that is still the advertisement, and kids my age are now having children now. So did it actually work or not remains to be seen. But why was ESG such an effective way of changing people's minds about their consumption habits and what they were doing and changing it into the mess we see now?
Yeah, well, it's interesting you use the word ESG because it's a fairly new acronym. You know, people didn't use the word ESG even 5 years ago. I'd never heard that phrase. And it really came out of the investing world. ESG stands for environmental, social, and governance. And those are sort of three criteria for ethical investing. But I would say ESG grew out of the ethical investing movement. And then with people trying to sort of break down what ethical investing meant. So, you know, there's environmentalism as a movement, which is, I think of it simply as having a low time preference. I think of the heart of environmentalism as just caring about, like you said, your kids. I don't think that's a fiat thing. I think that's a human thing, thinking about using resources and building a world where our grandkids are better off than we are. And, you know, that means not just like dumping pollution everywhere, for instance. And it means generally building a better world. I think it's just identical with having a low time preference, letting your grandkids' happiness be as important to you as your happiness. If we had that, and if Bitcoin can achieve that, then environmentalism wins. That just is environmentalism in my book. Now, what exactly that consists of, something different. Now, what happened with ESG is, you know, people had this thought like, hey, I'm just throwing money into the market. And this is more fiat thinking, right? What happened was you cannot save anymore without investing. I think, you know, you go back 100 years ago, we didn't have a sophisticated stock market. You go another 20 years, we start to get a sophisticated stock market, but not everybody participates in it. It's speculative. But sometime in the 80s or whatever, everybody's retirement gets hooked up into investments. Everybody's investing all the time. And it's in a way, it's 1971. Right? We start printing money everywhere. You cannot save in money. Money is not a savings vehicle anymore. Everybody knows that. You have to gamble in the market in order to even stay even with inflation. You can't do that with cash anymore. So everybody starts giving their money to the market. And then we also get the rise of these index funds. Rather than picking out stocks or having your broker pick out stocks, you just invest in an index. You just buy the whole broad market, whether it's the Vanguard Total Market Fund or whether it's just the S&P 500. So now your savings vehicle, everyday middle-class Americans, their retirement vehicle and their savings vehicle, we've all become investors. We've all become speculators because the dollar has forced us to do that. And now people start thinking like, wait a minute, what am I kind of funding with my savings? Well, I'm funding basically the entire economy, kind of however these fund managers decide to do it. And that depends on, you know, what goes into the index that I'm investing in, let's say. It's all going to be decided by these centralized operators. Well, maybe that stuff doesn't actually reflect my values. Rather than me investing in, say, my family business, my town, people I know, land that I know about, I'm suddenly investing in this very detached way into just the broader economy in ways that certain central planners, basically, whoever's running these indexes and funds, whether it's BlackRock or Fidelity, or whether it's the NASDAQ deciding who's listed, those people are determining where my money goes. So I think this is a very non-fiat thought underneath so-called ESG, which is like, I want to decide how my money gets invested, and I want to make sure it reflects who I am and my vision of the future. I think that is just like, I don't think that if that in any way as fiat thinking. I don't think of that in any way as flawed thinking. I think it's free market. That is a free market where people want better control of their own capital. It's the capital they worked hard for, and they want to control it. So that's the good current underlying, ESG. It's like, you want my money? Tell me what you're doing and whether it aligns with my values. Now the games begin. Once we have that general virtuous underpinning, firms are like, oh, we can monetize that. Like, you want information about companies so that you can invest in ways that are concordant with your own values. We will sell you a product. And our product will basically measure how well companies are doing on metrics of value that we establish. And then we will rank those for you, and we'll put funds together that just bundle them. And we'll decide, we'll basically do the hard work for you, and then you can just come along and see ESG fund and put your money there. So that's where the fraud begins. I mean, ESG is like full of fraud and misrepresentation and just stupid accounting, as Elon Musk pointed out, when Exxon is an ESG company and Tesla is not. The whole thing is a joke. What happened basically is ESG became bullshit metrics like the rest of the world we live in. And then companies devote wings of administration and bureaucrats and middle managers to like maximizing those metrics, those ESG metrics, in ways that will bump them up various scales. And that becomes a barrier to entry for small companies. It becomes a moat around big companies. It becomes one more kind of like feather in the peacock's tail, where you're signaling fitness by doing all this bullshit that doesn't really add any value. So I think the system of ESG is an investing system. It is seriously corrupt and fucked up now. And maybe I can link some sources on that afterwards. The head ESG guy from BlackRock wrote an amazing, massive expose in Medium about what it was like to be the ESG guy at BlackRock and how much bullshit it is and how it accomplishes nothing. And I can simply forward that on to you. But there are many, many such critiques. And so in short, if I can step back, I think the underlying impulse for ESG is noble. It is free market. It is bottom up. It is people wanting to control their capital rather than give it to other people who invest it in ways that do not match their own desires and values. And I can't imagine anybody fighting that unless you really want opacity and you want central control. But then ESG is, as a product, is bullshit and fraud that is designed to part people from their money and basically greenwash stuff that pays to be greenwashed. And so that, I think, is horribly destructive. And what I don't like that sometimes some Bitcoiners do, is just use this word, the ESG narrative, when for me, it covers both of those things, both the impulse to, spend your money as you see fit, it's your freaking money, and also these games on Wall Street, which then also, of course, are looping in Washington. It's not just Wall Street, but it's Washington too. Now that the SEC is requiring ESG reporting, they're going to determine the metrics and values. The SEC, ultimately, it's going to be the SEC and BlackRock. And then there's going to be like tax stuff that's going to be tied into this.
I know, it's
so it's I oppose all of that. I oppose all of the top-down impositions of metrics on the economy. I think that is the quickest way to kill an economy and stifle innovation. Is to have a bunch of bureaucrats in DC come up with arbitrary metrics of value where we all have different values. ESG is going to be different for all of us. And they're going to come up with bullshit metrics that reflect one set of values and which are gameable, and then tie in a bunch of other bureaucracy with it on the tax and reporting front, and then reward people for maxing that out. I mean, I see disaster lying in that direction, but I do want people to be able to invest in the way that they see fit. And that's a noble impulse. And I think I would like to further that end for people if I can.
Yeah, absolutely. I guess one thing that's interesting to me is I think what you're saying is ESG is just one flavor of a thing. It's one flavor of a thing that you could care about when you're investing your money. And I guess I'm curious why there's the attachment to that specific term, because it feels like I hear what you're saying. It feels like it's been completely co-opted at this point, right? It stood for something reasonable and noble, which is like free markets. You should be able to do whatever the fuck you want with your money. And it has now been turned into this like, it's like that, in I forget which alien movie it was, but one of the last ones was Sigourney Weaver, where she goes into the room and there's all the clones, and it's like, kill me. And it's this like horrible Cronenberg monster. So like, what is the attachment to the term ESG specifically for you? If there is.
Yeah.
one?
I mean, I hate the term. I don't like the term at all. I think where it starts is like, we had problems that we identify with corporations and corporate, basically business ethics. So we have externalities that are not internalized in price. Those are failures of regulation, basically. We have those externalities can be harms to a group of people, or they can be benefits. Externalities can be positive. And so those can be environmental, or they can be in terms of what you're doing for society. Or they can be in terms of corporate governance. There was a lot of attention in the 2000s to basically failures of corporate governance structures where insiders were enriched at the expense of shareholders. And so you can see people saying, like, look, what are the ethical failings of business? Well, they're environmental, they're social, they're in governance. So what if we come up with a fund that, rather than trying to fix those failures through regulation, allows us to fix those failures through people putting their money where their mouth is, putting their money where their values is. So, I mean, that's how it happens. But as soon as you get farther than that, you say, okay, what kind of corporate governance structure is ethical? What do you mean social? What do you mean environmental? Then it's completely up for grabs, and then and controversial. And I've talked to people who are in Wall Street about this, and they're saying, like, there's no agreement about what these things are, none at all. And
it's always going to be different for every person.
Exactly. So there's really no shortcut to doing your own due diligence or finding what's going to happen. What I predict is going to happen is that you're going to have, because the country has fractured socially and politically, religiously. I mean, we are on the verge of like some kind of social civil war. And so you're going to have niche funds that reflect the values of people in the niche. And here's what's happened with ESG. We've taken a certain niche of culture and we've called that ESG, but really it's like one flavor of ESG that reflects one cultural viewpoint. This is why I guess I heard last week there's like an anti-ESG fund that like basically takes the stocks that do worse on the ESG metrics, and you can invest in those too. And that's like step one. But step two is, your politics are going to be aligned with your investments, and you'll come up with a fund that just services those investments. In a way, what we have is like, we had the illusion that Wall Street and politics were independent. It's like Reed College has this like declaration of political neutrality. So we have a $800 billion endowment, something like that, and we claim to not be political about how we invest that fund. But if you think about a place like Reed that is hyper political, like how long will that political neutrality really hold up, given the hyper political nature of the constituency of the institution, right? And likewise, if you look at something like Liberty University or something on the right, how long are they going to keep investing in like woke companies that, go entirely contrary to their right-wing values? So you're going to see like a right-wing kind of investment fund pop up that serves the Hillsdale colleges and the Liberty universities, and you're going to see left-wing ones pop up, and that's fine, that's free market. But when you call one of them ESG and then you intertwine it with policy, that's just not going to survive, because half the population will disagree that that's what accords with their values. They'll just say that's what accords with your values, and then it'll all melt down.
Well said.
So I want to keep going down this rabbit hole. And Troy, if you don't want to, you're well within your rights. Cursing is allowed, and you can tell me to fuck right off. Like ESG, to your point, like I really started paying attention to it in 2020 when I was starting to invest full time. And on one of the publications I followed, they would send out a weekly report of ESG companies. How much did, I don't want to say like COVID necessarily, but the fact that during COVID, people were at home, there was a big influx of traders. You can see it based on the volume of trades that was happening in 2020 versus what's happening today or even just in 2021, that in fact, the traders were far more active. ESG essentially was being shoved down people's throats. To everyone's point here, and this is my least favorite part about ESG, is the G is governance. And ultimately, any company can, if they ignore environmental, if they ignore social, we're governing the right way. Like, you asked us to tell you if we're doing it right or wrong. Well, we're doing it right. You trust us? Cool. So we're ESG positive. Social, it's as simple as, oh, we hired a head of diversity. It's the only person of color in our entire business whatsoever. And she actually makes more than, or she makes less than every other executive at her level. But hey, we checked that social box. I'm literally calling out my former employer, Paradigm, who did exactly that. Laid off every single person of color and then hired a diversity specialist as their S for ESG. So,
oh my God.
Like, why do things like social and governance have to get clumped into, while I do believe we need to take care of our planet, we should look for ways to be more efficient about everything that we're doing. That's not to say inefficiencies shouldn't exist, but we should strive to be better. So why the fuck are we clumping in these other two things that have nothing to do with environmental, and how damaging is it to, I think, just the idea or narrative of finding efficient energy sources under the landscape of ESG?
Yeah, my answer is well. First of all, that's a great example of the metrics being gameable, and I have my problem goes more broadly of I think we are completely taken with metrics, and metrics are always gameable in my book. They can be useful at times, but I think sort of as a management philosophy, we're just taken with metrics, and we're going to all suffer for that. But my thinking on this is, well, the person I was thinking of before, who was at BlackRock, is Tariq Fancy, and it's shaped by Tariq Fancy's writings. The reason why ESG is being pushed down your throat right now is money. It's because it's the fastest growing segment in finance. It's because the world of finance was like, okay, we invented all these derivatives. What do we do now? Well, we have this market we're not serving very well. We deliver products for them, and then we profit. Like, we can charge a premium for this ESG stuff. So I think that's what's driving it. It's simple. They did the market research, and then of course they're also creating the market with advertisement, and then it becomes a thing. It becomes a thing, like, are you ESG investing? Right? It's basically a social virus that has caught on, and they help to create that virus, but they're also riding it. Everybody wants in on it. So it's kind of like when, in 2017, when, and I guess it happened again, when people started doing blockchain stuff. You just put blockchain in front of the name of any company, and suddenly the multiples just like explode. And it's the same right now. You just put ESG next to some fund, and it just draws capital. So I have a crude and simple explanation of what's going on here. I don't think it's a conspiracy. It's a convenient match between market possibility and a certain ideology. And it's like, okay, perfect. We can exploit this and whip it up further. And that whole thing grosses me out, I have to say. And, your title is ESG an attack on Bitcoin. That cultural nexus of top-down control, dictating values, shaming people into certain kinds of investments is an attack on Bitcoin, in the sense that Bitcoin is bottom-up, individual choice. It's freedom money, right? So and also they're going to design their metrics in a way that Bitcoin's going to come out badly. They're already doing that. I think that's what the federal government is doing right now. I think that's what the White House is doing right now. They're coming up with metrics for cryptocurrencies And they're going to come up with metrics that measure like, energy per transaction or whatever. And they're going to design those metrics in a way that Bitcoin sucks.
Yeah,
despite it, despite it maxing out on the social and the governance, and in my view, even on the environment and energy. Despite that, they will come up with metrics that are stupid because they don't understand Bitcoin and intentionally designed
exactly
to make it suck on their metric. And we'll try to explain otherwise, but it won't matter because we're going to be in front of ESG boards at pension funds, at sovereign wealth funds, and they're going to say, yeah, and I say this, they're going to. I mean, this is already what it is. Bitcoin is not ESG friendly. We can't invest in that. How many times have I heard people talk to me and say, I can't invest in Bitcoin because it's not ESG. Our firm can't touch Bitcoin. We can't even write emails about Bitcoin internally because it's not ESG friendly. I heard this from like a solar developer, like who wanted to start like a black ops type of program within the company where they would discuss cryptocurrencies and Bitcoin. And somebody wrote back saying, our company cannot be involved in Bitcoin in any way because of ESG concerns. Like, even this email, I'm going to delete it. Please don't email me again. And like, that's the kind of weird blowback we're going to get. It's going to be institutionalized shitty metrics. So we have to fight it.
It's so infuriating.
Don't you love when people who know absolutely nothing about technology or just the topic at hand are the ones who get to decide what rules and ways to analyze the data of the topic that they know nothing about?
Well, but I think, that's bad. But I think worse is when people know enough to understand what Bitcoin is, since we're talking about Bitcoin. And as Troy said, they are intentionally crafting these metrics in such a way that they will anchor into the existing kind of like social and moral bullshit that people have been force fed. And then they sort of have to say no, because otherwise you're a terrible person and your personal identity doesn't support it.
There's the identity part. Yes. But it's worse because the federal government has now said, you can't work on any cryptocurrency you own. So they've made that a policy.
Oh my God, I know.
So the people coming up with the ESG metrics for Bitcoin are guaranteed not to own any. And I don't know about you guys, but when I owned Bitcoin is when I really started studying it hard, because skin in the game, and suddenly like your motivation is off the charts. Like, am I an idiot? Am I in a cult? Is this stupid? Does it have a chance? You start like the whole game changes when you own it. And so for me, to have the entire federal government writing policy for Bitcoin, but guaranteed none of the people in the government who own it are doing that writing, I'm like, I'm just bracing for the worst, And I have to pair this because, this is all gloom and doom. And I have to pair this with, I should say, I'm talking to people in companies every day in industry. And in the industry spans, the power industry, utilities, power generators, grid operators, people building on Bitcoin and software, people building on Bitcoin and, mining in landfills, doing flare gas mining. And when I talk to people across this industry, I am so amazingly bullish on Bitcoin's integration with the energy future and its acceleration of a future that I want my kids and grandkids to have. Bitcoin makes me really optimistic about a subject that I was very pessimistic about, which is the future of the environment. And so on the one hand, I'm really pessimistic about the bullshit that is going to rain down on us from the top, both from the top of Wall Street and the top of Washington and the top of Brussels at the ECB. And at the same time, I'm super bullish on Bitcoin itself, Bitcoin and energy. It's just a question of like where and when and how these innovations happen. But the incentive structure for integrating Bitcoin with a sustainable and plentiful and abundant energy future, the incentive structure is just too good. It cannot be held back for very long by central authorities.
I want to maybe try to unpack a little bit of this. Our producer Chris threw out a pretty legitimate question, although I think we're assuming Senator Lummis holds Bitcoin. But But like, how much of an inhibitor is this policy that you can't hold a cryptocurrency that you're working on something like Lummis's bill? Like what?
Well, Lummis does hold Bitcoin, and she's declared exactly how much she holds and how she got it from her son, and she's told her whole story. I think she had 5 Bitcoin, but she's recently purchased more, if I remember right. So Lummis is a Bitcoiner who hodls, and I think it doesn't affect her. This rule is for the Biden administration. It's an executive branch restriction, right? So it's the Biden has taken a whole of government approach, and I'm pessimistic, but I shouldn't be too pessimistic. Look, there are a lot of smart people in government. We at the Bitcoin Policy Institute, where I work, we wrote our responses to their call for information, their request for information, as a part of the executive order, and other Bitcoiners did too. We might get through to some of them. We have the truth on our side. We have good arguments on our side, and there's some dedicated and bright people working in government. And so I shouldn't be super pessimistic, but it's just it's also about where the money is. Where is money flowing into the system, and who gets an audience? Who gets an audience with the Biden administration? What meetings I have seen, it's like, you'll have 8 representatives from the crypto industry. None of them are Bitcoin companies. Every one of them is a shitcoin company. And why is that? Because they are all companies. Because their tokens and chains are not protocols and commodities. They are disguised securities. But that also means that they have organized, centralized representation with like any other industry, right? Whereas Bitcoin, we're like a decentralized mob. And although there are companies that build on Bitcoin, there is no CEO of Bitcoin, although, lawmakers have asked to speak with that person, the CEO of Bitcoin, right? We don't have one. So, I mean, I have to temper my pessimism. There are bright people there. It's just that the system is not set up to think clearly about a decentralized protocol and an asset that lives on that protocol. It is set up to hear industries. And when it comes to that, it's amazing that, what is whatever 40% of all value on crypto assets doesn't really have a seat at the table, in my view, in these things, and nobody owns it within the administration, and we're guaranteed of that. So we're relying on these bureaucrats to read carefully what we write at BPI and other places, and to be smart and appreciate the arguments. But it's hard to be optimistic on that front. The legislature is a completely different deal. Bitcoiners have done a good job of reaching out to legislators and starting to educate them and starting to build relationships. We have a long way to go on that front, but we are catching up. And clearly, when you hear Ted Cruz talk about Bitcoin, it's like, wow, this guy and Bitcoin and energy. I'm not a Ted Cruz fan in general, but when I heard him talking about Bitcoin and energy, I was like, oh my God, he's amazing. I mean, he gets it as well as anyone. This is phenomenal. So I have much more hope about the legislative branch than I do the executive branch.
I like it.
I want to unpack this though, because I have this debate. I was genuinely having this debate before you even came on about the validity of some of these politicians who make claims and statements about Bitcoin. I think the perfect example of this is Eric Adams. Comes out and says, while he's running for mayor of New York, I'll take my first paycheck in Bitcoin. Not even a week later, actually, I'm going to split it between Bitcoin and Ethereum. And then fast forward to the legislation that we saw New York State pass, and someone who's claimed to be pro Bitcoin, who claimed to be pro crypto, was awfully quiet. I'm not shy about saying this. I think Ted Cruz is the scum of the earth. I think he has very quickly just latched on to the next thing that'll keep him in office for one more term. And he'll just as quickly take the other side of the argument if it serves his benefit. So my question is, why do we even care about politicians getting involved in Bitcoin? In theory, like China banned Bitcoin mining. China banned transacting of Bitcoin. There's still transactions of Bitcoin happening in China, of all places. Do we genuinely believe that Bitcoin would just stop to exist in America, let alone the world?
No.
Shut up.
I mean,
I
no,
want
it's
Troy's opinion.
I mean, no one's saying that. Troy's
Mute him. Someone mute him.
Jesus. Troy?
I'm kidding. Go ahead, P.
Well, no,
No,
go
no,
ahead.
I was gonna say like no one's even suggesting that, Q. It's I think this is the wrong term, but like almost like a false dichotomy, right? It's not about like, yes, Bitcoin, as Troy said earlier, I've said so many times on the show that, but the thing that's so compelling about Bitcoin is the incentive structures that are in place, right? The things that are the best for the network, or sorry, for the individual, are also extremely supportive of the larger network most of the time. And so you can't suppress something that has incentives that are that effective. There will, to your point, there will always be kind of people on the margins who are becoming larger and larger, and then eventually become the majority. And but having said that, we are United States citizens, and if the United States comes down against Bitcoin in a significant way, that will make our lives far more difficult, right? You don't have to like ban Bitcoin if you just create crazy, as a random example, like tax structures around it, right? Or laws around it. And so it's important because it really is this game-changing technology, and we want to be driving forward towards this hyper Bitcoinized world as rapidly as possible, not mired in the mud. That'd be my thought.
Yeah, that's really well said. And I mean, of course, TikTok, next block, and China. What's interesting about it is Cambridge is now showing 20% of all hash rate is in China. I mean, 20% of all hash rate, and it's illegal to mine there. That's phenomenal. How much money is held in China in Bitcoin and is being used to circumvent capital controls? I would guess a lot. I mean, it's just amazing. And yes, Bitcoin will survive, but I actually think that why we are so far behind the ball, a lot of it has to do with the attitude that government doesn't matter and we'll just do our thing. That's why we haven't put the energy into communicating, educating, and building relationships with lawmakers. It's because we're like, screw them. We'll just it's cypherpunk's right code. And that's what we'll do. We'll build an independent system. But when everybody's thinking like that, nobody talks to the lawmakers. But guess who is talking to the lawmakers? Shitcoiners. Shitcoiners are all up in their offices. And they get to spin the narrative. If you don't control your own narrative, they do. Okay, why do we care? Just as you said, I don't just want Bitcoin to succeed. I want it to succeed here and now. I don't want it to there's a part of me that's like, I went to the Oslo Freedom Forum this year and I was kind of like, let Bitcoin grow from Nigeria, from the Central African Republic, from El Salvador, from Guatemala, from Panama, let it happen there. And then let there be a collapse of this fiat system in a massive debt bubble. And weirdly, these non-aligned states emerge as global finance leaders in El Salvador, or whatever. Like El Salvador is the new Singapore or whatever. There's a part of me that's like, yeah, that would be cool. But I live here and I want it to happen here and I want it to happen fast. And I mean, think about it. Bitcoin is our bid for freedom money. It is our chance to empower the many rather than the few. Our current system empowers a few central bankers, the 1% of the wealthy, people in positions to make decisions about money get the reward. It's Cantillon effect. Okay, I'm not telling you anything you don't know. Bitcoin fixes this. But think about these alternative histories. The one where we actually, in the next 6 years, educate people about Bitcoin, both making policy and in the world of finance and people at large, the citizenry who elect those politicians. And we get them fired up and we get them to see what free and neutral and fair money could do for them. That's the one history, like right here in America. And the other history is where the shitcoiners have their say and they win the political battle and they win the financial battle. And we get the rhetoric of freedom, but we get the reality of continued financial servitude, where instead of the central bankers, it's Vitalik and friends. Instead of the central bankers, it's the VCs in Silicon Valley behind Solana, and it's Polygon and whatever. You know what I mean? and then we suffer through that while eventually people come to see, oh, this is also centralized and unfair, and oh, this is kind of a Ponzi, and maybe it collapses, or maybe it gets captured by the state. And then we're like, oh, we're right back where we began. And of course, Bitcoin is ticking along this whole time, but as a marginal player, at most taking the market cap of gold, rather than serving as a global monetary asset, a global reserve asset, accessible to everyone, and which functions as a savings device for everyone. Instead, people get fooled into this alternate reality, and we have decades to sort it out. I want path 1 rather than path 2. And so that means I have to act right now to do my best to bring that reality about. I mean, I think, the slogan of Bitcoin is inevitable. To me, I don't like the slogan. It's like,
I agree.
It's an excuse for laziness to me. It's like, what does it mean for Bitcoin to succeed? It means each individual makes individual decisions to adopt it. Okay? It's one by one, person by person by person. Bitcoin doesn't adopt itself. It doesn't adopt itself. We adopt it, right? So every one of these conversations we have, ultimately, Bitcoin's about supply and demand. Its value is the point where supply and demand meet. Those curves cross. That's where price is. Okay? So Bitcoin's protocol covers the supply side. It's 900 new Bitcoin a day for the next 2 years, and then drops to 450 and so on. But the demand side is human psychology. It's human psychology. Now, of course, that psychology is informed by Bitcoin's principles, and Bitcoin has great principles that are attractive to human psychology, like 21 million hard cap. That's attractive to us. So it's not just psychology. We're not in NFT land here exactly, where the value is just arbitrary. It's not arbitrary. It's grounded in the properties of Bitcoin. But that grounding in the properties of Bitcoin is mediated by the psychological, social, political, human, individual lens through which we perceive those properties. The properties do not just automatically lead to investment. And it's up to each one of us to communicate those properties to the people we love, our friends, and even our enemies. Bitcoin is awesome. It's in the structure like this. It's like, I'm happy if my enemies adopt Bitcoin, right? Because it's like leads to adoption. So I think Bitcoin will keep going. TikTok, it's not, and where it succeeds is all we can control, rather than whether it succeeds. But the pace at which it succeeds and the alternative realities that are before us are wildly different. And I think we seize our own agency. Bitcoin to me is really empowering as an individual. The monetary system that I grew up in and I've lived my entire life in does not give a shit about me. I am not one of its inputs. I have no say in how it goes, whether it will be. I have no say in it whatsoever. I am stuck with it. I pay my taxes in it. I get paid in it. I do not make monetary policy decisions. Jerome Powell makes them. So Bitcoin is new. I get to run my own node. I get to mine the way I want to mine. And I can convince other people to opt into this system in some way or other. Allocate a little bit, run a node, do some mining. And I can shape the future of money. I can shape the future of finance. That is incredibly empowering. Human beings have never been able to do this before en masse, in scale. Most human beings have not had a part of this decision. It's been the priests, the high priests of money, and whoever that was, whether it was bankers or before that were literal priests or kings. Those are the people who made that decision. Now everybody has that chance. That I feel like that is what's so great about Bitcoin, and I'm just going to take it and run with it. You know what I mean? I'm going to devote my life to furthering this end that I want, because I can actually potentially help it to happen faster and here rather than not as much, right? So that was a very, very long answer, but I keep running into this, and I feel like Bitcoiners are onto a really deep truth when they say Bitcoin is inevitable. But I also feel like, especially in a bull market, it's easy to kind of kick back when that's happening, and you're just like, oh, all I have to do is hodl. Bitcoin will just take care of itself. It's inevitable. It's like, no, get off your ass and talk to people. Think it through. You're now a citizen in the republic of money, in the republic of Bitcoin. And, you have the rights and responsibilities of a citizen, which means you get a vote with your node. You decide which software to run. Andrew Bailey and I wrote a paper we wrote a piece in CoinDesk called "Mine Your Values," and it's just basically this whole message of like Bitcoin gives you a way to exercise your power, and that's what's awesome about it. But also like step up and do it.
So, if you could just name one person, and I'll let you cheat and possibly name more than one. But who is the ultimate villain against Bitcoin? After all this conversation, we talked the ESG side of it, we talked the political side, we talked the idiot shitcoiners. Who, in your opinion, is truly the Thanos to Bitcoin's Avengers?
Well, I'm going to be going to this conference in a few days with him, but I got to say it's Alex DeVries. I do, because it's like the origin story of the FUD traces back to him. So he's not. When I look at what he's done, it is so impressive. He's somebody who, he had a hobby website called Doge Economist. He started thinking about the carbon footprint of Bitcoin. He came up with these kind of bullshit metrics, publishing it. He wrote a couple papers. He had a master's degree in economics. He went to work for a central bank. The next thing I know, okay, his article influences Camilla Mora to write this piece that gets published in Nature Climate Change. They cite Alex DeVries. Everybody cites Alex DeVries. He's the source in every paper on Bitcoin's emissions. He stepped into that space, and he's just repeatedly dishonest, fundamentally dishonest about how he presents data. And it took me a long time to figure that out. I'm an academic. I presume that people are honest. I presume that when I show them inconsistencies, they'll be like, "Oh, I'm sorry about that. I'll fix it." But that was not his response. It was just like double down at every stage. So he's responsible for the infamous energy per transaction stat, emissions per transaction stat. He keeps talking about the cost of a transaction in Bitcoin and dividing the total energy use of Bitcoin by the number of transactions. And that stat has appeared everywhere.
And it makes zero sense. Yeah.
It makes zero sense at all, for 1,000 reasons. I can take it apart, but it lodged in the popular imagination. 2 months of household energy use for one transaction in Bitcoin. Well, that's horrible. Who wants to do that? I mean, who's like your entire electric bill or 3 months or whatever Elizabeth Warren is saying now? It's always varying, And it's ridiculous because, of course, you pay like $1 at most for a transaction right now. And how can you buy 2 months worth of power with $1? How is this even happening? And that's because, that's not transaction fees. That's the block reward. And we have layer 2s that are taking our volume. And so when it comes to layer 2s, for instance, here's a part of dishonesty of Alex DeVries. The Lightning Network. He mentions it. He mentions it in some of his papers. Like, he actually mentions like, maybe the Lightning Network will develop someday. And if it develops, then the, use per transaction, the carbon per transaction, the electrical use per transaction will go down. Here we go. We get the Lightning Network. It comes along, and what does he say? He says, there aren't really Bitcoin transactions, so I won't include them in the stat. Also, we don't really know how many of them are happening. And then he's like, but what we should include is the additional power that those Lightning nodes are consuming.
Oh, for fuck's sake.
Right? So he wants to add that on top. So you can see what I mean? It's like this throughout everything he writes.
Yeah.
I mean, here's another example of dishonesty. So he writes this paper. Again, he does the dividing by transaction. He writes this paper on e-waste in Bitcoin, and he argues that we are filling landfills with e-waste. He argues that a single Bitcoin transaction is equivalent to binning 2 iPhones. That's how it gets 2 iPhones worth of e-waste for every single transaction in Bitcoin, right? And you look into his paper, and I mean, Nick Carter did the greatest breakdown of this paper. It was awesome and hilarious. But he estimates the life of a miner to be like 1.29 years, something like that, 1.3 years. And, there are S9s, they're still 5% of the network, even with the latest stuff coming out. And at the time he wrote it, they were 20% of the network. Yeah. And S9s were at that point, 5.5 years old. So you could just go onto eBay and look up S9s and see them all listed. And you can't find anything for cheaper than, you couldn't find anything for cheaper for $300 at the time he was writing that paper. So this thing is supposedly we've been through like 3 life cycles of miners, and you still have to pay really good money to get one of these S9s.
Yep.
It's just totally inexcusable. And he's got this very, very fancy mathematical model for determining the lifespan of miners. He could have just checked eBay. Another thing he could have just checked is the filings, SEC filings of miners themselves, because they have to write down their depreciation for miners. And if their miners were going out of profitability in 1.3 years, they would have said that, right? Because that erases some income for them. And then the truth is, I think even when, like with the S9s, even when their profitability goes negative, which they're getting there, we're getting close, they're going to slot into this awesome role that he refuses to acknowledge of absorbing excess energy. Your S9 doesn't have to be profitable. Rather than throwing it into a landfill, you just keep it there. And when you put it behind meter at a wind farm, and when prices go negative, you turn it on. And you turn it off when prices go back positive again, right? Or you use it for waste heat. Or you just wait for the Bitcoin price to explode again, because it's basically an option on future Bitcoin. So there's the idea that they're ending up in landfills on the basis of this bullshit model. And then it was every major newspaper around the freaking world. It was Time Magazine, it was Newsweek, it was the magazines, it was The Guardian. 2 iPhones binned per transaction, e-waste, blah, blah, blah. And then it appears in the letter from 70 environmental organizations to Congress. Then it appears in Senator Elizabeth Warren's literature. Then it appears in Jared Huffman's letter to the EPA. It's just like it spreads like wildfire because it started in a peer-reviewed journal.
Yep.
Right. So how is this guy not the supervillain? It's the ultimate source of misinformation, which then, the idea that, the idea that Bitcoin bros are filling landfills with e-waste. At one point, people measured the e-waste in grand pianos. I mean, there was different creative ways to measure it. And when when the actual percentage of e-waste due to Bitcoin is it's less than 1/10,000th of e-waste, less than 1/10,000th. It's basically nothing, because almost every ASIC that's ever been designed, it still makes sense to hold. So it's basically, it's hard to even estimate how much it is, but because it's so low. But anyway, that's DeVries. And he's on a campaign, and now his buddies also have an ESG style way of measuring. They have a firm that measures, the environmental footprint of various cryptocurrencies per transaction and overall. And he is pushing that business on the European Union and on businesses in Europe who want to invest in ESG conscious ways. So he's the person inventing these bullshit metrics that will be taken up by governments, banks, and investment firms. He's the one who's hand feeding it to them.
All right, I'm changing the title to Alex DeVries is a liar and a hack.
Sounds good. Now I'm going to have dinner with him in a few days.
I want to send him. Tino, Andrea, please clip this segment, and we're going to go ahead and DM that to Alex, just so that that dinner can be as spicy as possible.
Oh God.
He's the keynote, right? He's the keynote speaker at this conference. It's in Paris. It's on the sustainable blockchain stuff. And, my message is going to be proof of work is valuable, and it's like nothing else. You can't replicate it with proof of stake. Proof of stake doesn't do the same thing, doesn't offer the same security, but more importantly, it's just a completely different model that centralizes wealth over time. When you offer people return on money for having money, especially if you're claiming deflationary status, what do you think that money's going to be like? Oh, suppose you have just a pot of money, and the people who have the most of it right now get interest on it, and it's deflationary, so that pot isn't growing. What does that distribution look like over time? That it just hyper concentrates wealth and control in the hands of a few people. It's a completely different thing. So my message is going to be, proof of stake does something completely different than Bitcoin. Proof of work is worthwhile. But my message is also going to be that Bitcoin mining is potentially powerful for catalyzing an abundant and green energy future. And I'll try to make the case. I'll try to explain exactly how that's the case if they let me talk.
Oh man, I hope they do. That sounds fucking awesome.
Can you give us a little bit of a teaser without spoiling the big points? Do you mind maybe think of this like an audition? This is the casting room.
Sure.
P&I
Well,
or the casting
one
directors?
thing Bitcoin does is the number one threat to the climate right now. The number one warming gas is methane, not CO2. CH4 is methane. It traps heat in the atmosphere, 80 times as much as CO2 over a 100-year period, and whatever, something like 30 times as much over a 25-year period. What am I saying? I got that backwards. Okay. It's many, many multiples of CO2 in its ability to trap heat. And it's responsible for up to 1/3 of all warming right now. And it's also, methane is also vastly more than we have thought it was. So we keep measuring methane with satellites and finding out it's more severe. And basically, Bitcoin mining is the only global bottom-up, monetized, incentivized way to clean up methane. Bitcoin miners are parked next to oil wells that have natural gas as a byproduct, and they can burn those off and turn them efficiently into CO2. And that's happening around the world. But also, landfills emit tremendous amounts of methane. I'm working with a company, Vespine, which is mining exclusively on landfill gases, and there's 2,600 landfills just in America. When your trash decomposes, it releases methane, and some landfills are capturing that methane and generating electricity and putting it to the grid. The vast majority are not, and so Bitcoin helps to capture that gas and turn it into CO2 in a really clean and efficient way. But I like this idea, actually, that we look for methane leaks and where the methane is coming from agriculture, wastewater treatment facilities, landfills, oil and gas byproducts, oil and gas leaks. We can see it from space. And we can produce these heat maps where we see where the methane is coming from roughly. And we can send in Bitcoin miners like fire jumpers. That's basically, methane is energy. It's money. We can monetize it. And there's nothing else that will do this job. So yeah, the number one threat to the climate is methane. Bitcoin fixes it. But also, Bitcoin solves the main problems facing renewable development, renewable energy today, and nuclear for that matter. The inflexible sources of load. The great thing about gas and coal is that they're adjustable. You can adjust a gas turbine plant very easily by consuming more gas and generating electricity, or turn it down, consume less gas and less electricity. Solar, you just get whatever the sun is giving you. Wind, you get whatever the wind is giving you. And nuclear, it likes to pump out at a very, very steady pace. So the actual demand of the grid has to be met precisely with the supply of the system, and those are mismatched. And the upshot of that mismatch is that we end up curtailing a lot of renewable and even nuclear power. Curtailing means we just waste it. We don't send it to the grid. And we end up having a lot of negatively priced energy on the grid at various times of day and times of year. And that slows the build out of new energy, because that negatively priced and wasted energy is not creating revenue for the people building power plants. And so their balance sheet doesn't look as good. And by monetizing that waste energy and providing a buyer of it, which Bitcoin miners can be, we make it financially viable to build out new energy plants. And the other main thing standing in the way of renewables is interconnection wait times. When you want to build a renewable plant, it's not just that it's unclear what your buyer will be and what time of day on the grid, but it's also not clear that you will get connected to the grid. The wait times vary. I just saw in Ireland there was a 10-year wait time to get connected to the grid. So how are they going to build new power plants there? It takes 10 years to get interconnection, that's your buyer of power. So who's going to finance that? In California, there's a several-year wait to get connected. So Bitcoin fixes this too by providing a buyer prior to full grid connection. Bitcoin can take the power off those generators in the meantime. And then once the interconnection is made, the miners move elsewhere, most of them, and the power plant now feeds the grid. I'm working with different kinds of developers of renewable energy. who all appreciate and see this at some level or other, because they're all facing the problem of what's called solar deflation. As you get more and more solar on the grid, you have more and more power at certain times of day when the sun is shining brightly, and that power is less needed. And so Bitcoin miners can mine with that power and provide financial value for that excess power, which allows you to kind of overbuild a system with renewables, which then can become a robust system. Like you underbuild with renewables, and then you have a lag in sun and wind. You might not have any power on the grid. If you overbuild, and the amount you have to overbuild by is estimated differently in different places and by different people. But if you overbuild renewable capacity, then you'll have less risk of not meeting power demands. So basically, as the grid gets to be high penetration renewable, it's good for the atmosphere. It's very bad for the grid. It's intermittent. And Bitcoin fixes the problems mostly financially by providing a buyer for power that didn't have a buyer and making these projects financially viable. And we just like a subsidy, just like a government subsidy, basically, except it's not a government subsidy. Joe Manchin killed off the energy portion of Biden's bill, and it's like, okay, Bitcoin doesn't need Joe Manchin. It can do the same thing just privately, and it will do it efficiently, right? It won't do it for power projects that don't make sense. It's not going to be, solar in the Arctic Circle. It's going to be the free market finding. Think of it this way: Bitcoin puts a floor under energy prices worldwide because it's location agnostic, because it's time agnostic. It produces the same amount of Bitcoin from the same amount of energy anywhere at any time, anywhere in the world with an internet connection. That means Bitcoin will seek out the cheapest energy worldwide and monetize it. Right? So if you can find cheaper energy somewhere, Bitcoin will just flow there. And that's going to be, not only is it going to accelerate the build out of renewable, which right now is the cheapest power. Solar is the cheapest power right now. But it's going to do it in an efficient way, unlike subsidies, which are going to be subject to politics. Anyway, how's that for an answer?
If I could find the unmute, I would have said that was beautifully put. And honestly, I just need to know where I can watch the full conversation when it happens, Troy.
Well, thank you. And I mean, this is all stuff that Bitcoin does automatically. I mean, I have my own idea about how to, if you're an ESG conscious investor and you are concerned about the carbon footprint of Bitcoin, how you can hold Bitcoin in a completely carbon neutral way simply by mining some Bitcoin as well alongside your holdings. That's the idea that brought me into this space a year ago. And basically the idea is, if you own X percent of all Bitcoin, do X percent of mining in a very low carbon way. If you own 1% of all Bitcoin, do 1% of all mining. And when you mine Bitcoin, you increase the difficulty for all other miners because you find blocks sooner than 10 minutes. And then the difficulty adjustment brings us back to 10 minutes by making it harder. So that's a disincentive to all other miners. When you buy Bitcoin, you give an incentive to all other miners because you make their Bitcoin worth more. You make their block reward worth more. So if you can bring these two incentives into balance, one is an incentive to mine and one is an incentive not to mine, then you won't be giving any incentives to other Bitcoin miners anywhere in the world, either positive or negative. And so your carbon footprint will be equal to the carbon footprint of your own mining and no other mining. And that product is something I'm trying to develop. I'm working with a number of firms. It's hard to bring a real product to market. I'm a philosopher, I like deal in the realm of ideas. Real products are different, but I hope to have, an ETP or an ETF that's available to plebs and to institutional investors, so I can walk into the ESG board instead of having to educate them from the ground up about Bitcoin and how it's going to transform our energy future. Just say, here's a way to do it. Just buy this thing, which is like GBTC, except it also has a tiny percentage of it is devoted to mining, either like mining on landfills or mining in microgrid installations across the global south. There's like 1 billion people who don't have access to electricity. How would you like to buy some hash rate that actually helps monetize the build out of those microgrids for the global South. Talk about ESG. Like, that's an amazing story. I'd love to be a part of, and I'd love to give Bitcoiners, or actually my audience isn't really Bitcoiners, it's pre-coiners. I'd love to give pre-coiners access to a way to hold Bitcoin that is provably carbon neutral, and which is 99.5% Bitcoin and 5.5% Bitcoin mining.
Very interesting. I love the idea of what we were talking about earlier, just basically like people should be able to do whatever they want with their own assets. And I think that what you're talking about has the potential to satisfy that specific need of people who...
Exactly. So it's something like, once you divide through the bullshit ESG, which is top down, which is dictated to you, that's just ridiculous metrics, blah, blah, from the underlying impulse to invest in whatever the hell you want to invest in, then you have to look at the classes of investors and say, what are they looking for? And how do we appeal to them? And I think Bitcoin itself is already ESG in the real ESG sense. It's already ESG. But I think if you want to be sure that you're holding Bitcoin in a completely carbon neutral way, we can do that. And we don't have to have there are other people out there, somebody else speaking at this conference actually, who agrees with me, but is selling like a token to green your Bitcoin. And that token is, like gives you a say in the DAO, and the token goes to the Bitcoin miner. And the token greases. I mean, what they're doing is forgiving your carbon sins. Yeah, exactly. So it's the new, pre-Martin Luther Catholic Church. These are indulgences. There's a lot of firms out there. They want to take money from you and forgive your sins.
I mean, that's what carbon credits are at their core.
That's what carbon credits are, totally largely bullshit, because they don't actually work.
Exactly. And, it's complete horseshit.
And the return on a carbon credit is minus 100% financially.
Nailed it.
And what you could do instead is take up your role as a Bitcoin citizen in the Republic of Bitcoin and do a little bit of mining. Hey, when I came on board in 2011, we all mined, And so it's sort of like a throwback, like, hey, do a little bit of mining. And, you don't have to, but do you want to? And then if you want to mine, like, what kind of mining would you like to be a part of? Would you like to just maximize the return on your Bitcoin? Then we'll just find like the cheapest way for you to mine that returns a given amount of Bitcoin. Maybe that will be green, maybe that won't. Would you like to mine Bitcoin in a way that helps to accelerate the rollout of electricity to the global South? Would you like to mine Bitcoin in a way that helps clean up methane emissions from American landfills?
Do you want to save the children?
Do you want to save the children? Exactly.
Yeah.
But do you want to save the children with Bitcoin mining? So,
exactly.
And if people want to do that, like, more power to them, man. I'm so pumped about landfill mining. I work with hydro mines with basically excess electricity from Niagara Falls. I think that's a great thing. I mean, taking basically a burned out shell of a post-industrial community that's losing population every year, bring in some miners, harness that energy, take advantage of the infrastructure that's left over from when New York was an industrial powerhouse, and train people on this new industry. Like, I think that's wonderful. So it's basically like, pick the forms of mining you like, and invest in them, do them a little bit along with your Bitcoin, or not. There's nothing mandatory about it. And no, I mean, I'm not shaming anyone. I will shame people. I think that's the other part about ESG that rankles people, is it seems to be a finger wagging enterprise, and people don't like being shamed. I don't like being shamed, especially for how I invest my money. If it's shameworthy, then why don't you just make it illegal? Like, why don't we just, you know what I mean? If the activity is shameworthy, then pass a freaking law. We have a democracy. I don't kind of like this other avenue of investor pressure, which is, the finger wagging kind is like, that's just, in general, people are really judgy. People are super judgy about everything. I mean, that's kind of what Twitter is. It's like a place where people judge other people. And I'm not into judgment, and my attraction to, like, giving people ways to invest that match their values are not about judging the people who don't take up those products. Not at all. It's not about that. It's just about it's capitalism, man. It's like you see a need, you meet the need. You know what I mean? So it's like I see a buyer, I see a seller. I see somebody building out microgrids. Do they have great uptime on those microgrids in Africa? Like, no, they don't have great uptime. The return on that hash rate is going to be subpar. But they are monetizing waste energy in a way that I want to promote. Am I willing to take a hit on that? Well, I may be able to. I may be up for that. Other people might not. They might just want to return maximum on their hash rate, in which case they can do that, right? It's like depends on your own values, and no judgment either way. I'm not saying people all need to be like, you can only invest in blah blah blah.
No, you're saying people should have the choice.
People should have a choice. I don't know how that could be controversial, really. Somehow it is, but I don't know how it could be controversial.
I mean, I think because of all the baggage that's associated with the idea of ESG, right? It's like,
That's
as you said,
it.
we spent most of this conversation like sort of deconstructing what ESG is and what it means.
ESG is like, it's become, I said this at the Bitcoin conference, it's become talismanic. It's like you invoke it like a spirit, like ESG. And then
it's like
some people are, it's, like everything in our society. Yeah. Yes.
You say chupacabra too many times, he'll appear and suck the goat out of you, which lives inside all of us.
Bloody Mary, Bloody Mary, Bloody Mary.
Exactly. It's become this like totally. I want to take. I know I'm impassioned, but I want to take the temperature down on this one and be like, let's think through in a nuanced and careful way about what we do and what pisses us off when people say ESG, and what is it that pisses us off. What is it that we hate about it? And then is there something underlying that? I mean, that's worthwhile, because this is always how things are in life, right? Things are always complicated. So you always dig in and you're wondering, what was the impulse to this in the first place? And can we salvage it? And can we reclaim it in a way that doesn't piss us off? And I hope we come with that kind of nuance. And maybe it's just like the academic part of me, and sometimes things really are simple, right? Like some things are simple, like just like buy and hold Bitcoin. Sometimes it just is that simple. But this one, I hope we can be nuanced about and look at the people who are investing in ESG and think about their underlying motivations. They're good. It's like mom and pop. They saved and worked their whole lives, and then they hear this scary story about bad corporate governance, about bad social effects, about environmental pollution, and they're like, oh, I don't want to do that. Okay, how do we serve those people, mom and pop, who saved up? That's their labor, and they don't want to contribute it in some ways, and they do want others.
So wait, you're saying the re-education camps are bad? No, wait. All joking aside, I do want to make sure you have time to tell people where they can find you.
Stop, P. First, final questions. Troy, have you been to Amsterdam before?
Yes, I've been to Amsterdam.
What do you think of when when someone says Amsterdam? What's like the first thing that comes to your mind?
Bicycles? Sorry. I mean, it's a really nasty airport, an amazing bicycle scene. I'm a cyclist, and so they've done really, really well with bike infrastructure. But what were you going to say? Well, you're going to say the conference?
Well, I wanted to ask you, of any Bitcoin conference or conference you've attended, who's a speaker that you wish you'd seen, or one that you have not yet seen in person?
Oh man, this is tricky because I've been so fortunate to meet so many wonderful people and Bitcoin events over this year. But I would have to say my co-author on this white paper we wrote together, Andrew Bailey, who's a professor of philosophy at Yale and National University of Singapore, Yale NUS, who's in the US right now, writing a book on Bitcoin. Andrew is one of the most stimulating people I've ever talked to on Bitcoin. He's also an amazing lecturer and teacher. And I mean, he should totally be on the circuit.
George, mark it down. You got it. All right. P, please take us away.
No, I was going to say, like, where can people find you? How do they stay in touch? What is your Twitter handle? What's your personal phone number, address, social security number?
Well,
and birthday.
Yeah,
And mother's maiden name.
and firstborn. Yeah, I'm at the Tro Crow on Twitter, at the Tro Crow, and the Twitter has kind of become my home in the last year. I spend too much time on Twitter. Thank you guys for having me on. Really, really appreciate it. This is a wonderful discussion. Thanks for being open. I think we pushed, beyond some shibboleths and easy sayings in a little bit more deeply, and I really appreciate your open mindedness and creativity today.
Yeah, absolutely, man. We got to have this one. We got to go into more depth in the near future. I always appreciate, as I said at the beginning, your approach, your willingness to engage in any topic openly, rather than just being like, "Die, heathen," which you have screamed at me a couple times before, but there were extraneous circumstances. But yeah, man, we'll have to have you back soon.
Thanks so much. This was great.
Peace.
We're going to cut to a commercial break, and then we'll be joined by Dylan LeClair and CK to talk some updates from Bitcoin Magazine Pro.
And we're back. Q is grabbing his headphones. Now he's got his little Apple listening device built in. But rest assured, all will be well soon. We still can't hear you, Q. Dylan,
the whole time.
Dylan, you are looking sharp as fuck. You got a gamer chair.
It looks like he's got a date planned for later, man. What you got cooking in Vermont? Oh, you're muted. And we lost him. But before we get Dylan LeClair to come back, as you guys saw, the censorship-resistant issue of Bitcoin Magazine is available to purchase. If you are not subscribed, please feel free to go ahead, buy an annual subscription, use promo code BMLive to get 10% off. If that doesn't work, feel free to just DM Joe Rogers incessantly. I'm going to go talk to people on Twitter Spaces, but do that. Go buy some print mags.
Can you guys hear me now?
We can indeed. You sound glorious.
Nice.
Apologies to our audience. As always, we take a moment to...
What's up, everyone? We are just getting...
Are we back? Terrible echo. All right. Give us a few more moments, my friends. We'll be off to the races. We got a big day ahead of us.
Dylan, we got a 9.1% CPI reading last week. What were your initial thoughts, reactions seeing that?
Yeah, I mean, I think it's inflation is still running rampant. I think that's mostly been you're starting to see the base effects of inflation come down a little bit. Not come down, but you're seeing commodities roll over in a pretty significant way. So I think that the year over year inflation could definitely have topped here. I mean, I'm not running the data myself. I'm not kind of at the Bureau of Labor Statistics. I'm not actually calculating this stuff out. But I think that what's really the big key here is the labor market. That's what the Fed's kind of trying to squeeze out a little bit. So inflation can still kind of, like, I think you can see it top out at 9%, or maybe it goes to 10, right? But it's going to persist for a long time. There's structural issues in commodity and energy markets, and the disinflationary era of the past is somewhat dead here. And so there's still kind of a lot to be worked out as we go forward.
So I just want to remind everyone over on Twitter Spaces that you're able to see all of our pretty faces. Jesus, I can't talk. It's Monday, so excuse me. Over on YouTube, we'll be going over some charts in just a moment. Look, gas prices for me have actually strangely gone down 50 cents a gallon. So I'm still sitting above $5. Like, what is it in Nashville, P, for you? And Dylan, what does it look like in Vermont?
Man, I think for me it's just food prices. Like, food prices are getting higher and higher and higher, and it's wild. It's also interesting. It's very interesting to me that, I'm always fascinated by, separate from what's actually happening, from how the official government narratives are shifting. And so the more the government kind of acknowledges these increases in prices, that to me is almost a stronger signal than the actual prices themselves. So I feel like we've been seeing a lot more of that in terms of the public narratives that are being shilled.
Expand on that, since you avoided the question. Sorry, Dylan.
No, I was going to say, I mean, food price is the thing for me. You said gas has gone down for you, but cans of cat food, which I eat constantly, in order to stack more sats, save money, that's gone up. And now human food, obviously, like, fruit, veggies. I've just been very surprised at the cost. I assume that has to do with fuel prices as well, but not sure, man.
Dylan,
Yeah, I mean, I just bought a moped, so I get 80 miles a gallon. Which is great. I mean, I'm not sure about the actual gas prices. I don't really look. But
must be nice to be that rich. All right. So let's dive into some of these things. I mean, look, I'm with Dylan on the moped train. I mean, to be honest, I'm looking at electric bikes myself, and then those electric bikes cost as much as used motorcycles. So I may not live to the end of this year. So I digress. We got the CPI numbers in. We've seen people talking about Dr. Copper and the way copper prices are going, commodities. As as I mentioned, gas prices are starting to trickle down. You do see some food prices creeping up. I think it's just a lagging effect of the high gas prices. That's just my personal opinion, though. Dylan, what are the things in the commodity space that you're paying close attention to right now?
Yeah, I mean, definitely looking at copper. Copper has a really interesting relationship with inflation expectations. Over the last decade, it's like almost a 1-for-1, like 10-year forward inflation expectations with copper. The copper to gold ratio, Lynn Alden likes to talk about it. It's a really, if you overlay the copper to gold ratio with like kind of industrial PMIs, you see a really, really interesting relationship there. And so I just, in general, commodity markets, I mean, energy, I think has rebounded today. We're just in a different era. Inflation, yeah, I mean, maybe the month over month or the year over year rate of change of inflation can slow down, but you have to understand that inflation compounds. So even if inflation, a year out from now is not 9%, but it's 4%, you still have to take, that 9% and multiply it by 4% after that. It's only that kind of that derivative of inflation that's coming down, but in reality, everything's getting more expensive over time. So I think we like to talk about just a big picture stuff. Our kind of thesis for Bitcoin is kind of this asset, and obviously people say, hey, Bitcoin's not an inflation hedge. It's the market's proven that this Bitcoin is not a year over year CPI, consumer price index inflation hedge. But our view is that Bitcoin is a monetary debasement hedge. And when we're looking at kind of the global bond market, we still are of the belief that real yields over the coming years will be held purposefully negative, right? So fixed income as an asset class is guaranteed to lose you money. Bitcoin is obviously not doing great over the last year or so, but kind of it's still over its 2020 January 2020 opening price, whereas like the 60/40 portfolio is below that, right? So I'm kind of veering all over the place here. We started talking about commodities, but yeah, I think that structurally commodities, we're seeing just with the Russia-Ukraine war and kind of the reversal of globalization, you're going to see a lot of pressure on commodity prices for the long term. But something like a recession, something like a kind of a collapse in demand, which the Fed is trying to engineer, those can certainly make an impact on the margin and lower those prices.
I mean, look, we're bouncing around a lot, but that's due in large part because everything seems to be connected and intertwined with one another. Look, off of the heels of that CPI reading that we got last week, it seemed as though the potential for a 75 basis point rate hike next week is actually diminishing, and the likelihood of a 100 basis point rate hike could be on our doorsteps. Can we talk a little bit just about where or what effect these the increase in fund rate could have on just the market as we've seen it, as we've seen them progressively raise rates? We've seen the effects it's had. I mean, we're in the midst of this bear market. What are your expectations? How are you preparing?
Yeah, I mean, the most interesting thing for me is that you're seeing actually the bond market's like calling the Fed's bluff and saying, if you look at like the euro dollar futures curve, and this is last week's numbers, so I couldn't tell you exactly what they are today, but it has the Fed funds rate topping out at like 3.8%, 3.9% this December. And then actually, if you go out to like next December, it has the Fed funds rate at around 3.2%. And so you're seeing that actually the market's expectations is that the Fed actually cuts throughout 2023, just on the basis that there's just structurally way too much debt out there. And if you see, the Fed actually hike this far up, you're going to see kind of this huge collapse because of how much debt there is and how much, again, like it's a structural issue. So you kind of have this zoomed out view, and the reason why like a lot of the Bitcoiners or a lot of just the macro guys, despite what's happened over the last 4 or 5 months, or what may happen the rest of the year, why they're saying like, hey, it's all one game and they're going to print again. It's because of these big long-term structural issues of debt and demographics, which the demographic picture all over the world is super ugly. And so when you have these huge debt burdens and all these kind of entitlements and promises that governments all over the world have given their citizenry, it leads the central banks to only one path, which is kind of the more debasement of the currency and printing up more IOUs to cover those promises.
So just for those who, like me, had to quickly look up and make sure where we're at, the current Fed funds rate sits at about 1.5 to 1.7. So there's still plenty of runway to go. I mean, I want to really break this down though, Dylan, and correct me if I'm wrong, if I'm assuming that event that a lot of Bitcoiners are waiting for, that reversal of the Fed's position, this would be that a decline in this implied federal fund rate would mean that sometime in 2024, the market is expecting them to have to reverse their position. So is that an accurate way of reading this?
2023. Yeah.
Oh.
And, I mean, and you can go out and you can look at it's called the euro dollar futures. Originally euro dollars was because it has nothing to do with the euro. It has everything to do with just the fact that European banks had dollar time deposits. So euro dollar, the euro dollars or the euro dollar futures is named after kind of like it was originally like offshore Fed fund futures, but now that's at the CME, and it's basically a way to speculate or hedge interest rates, right? So the market's saying, hey, the Fed's going to raise to here. They've said that, but it's going to come down because the bond market understands that it's not sustainable over the long term. I think really what you're starting to see people see, and I think anyone that hasn't read Arthur Hayes, his latest piece, I gotta touch up on it again, but when you're watching like something like the Dixie, which is a majority just kind of indexed against the euro and the yen, the two, the second and third largest currencies in the world, which have meaningfully weakened against the dollar over the course of the year, because these guys are net energy importers, right? So they import their energy, and the central banks, the BOJ and the ECB, are continuing their epic monetary stimulus, right? The BOJ, Bank of Japan, is kind of implementing yield curve control. They're capping their bond yields at 25 basis points, and the eurozone, which is super fractured and kind of has weak countries within the eurozone, like Greece and Italy, with way too much debt to GDP. They're having to cap spreads, right? So the bond yields of those countries, because of default risk, is a lot higher than, say, a Germany, right? Even though Germany's in a really tough spot with all the Russia dynamics, so they're having to come in and actually to cap those spreads, which is another form of just money printing or quantitative easing, or maybe even yield curve control. I think they're calling it like some fragmentation or something like that along those lines. But essentially, you have this kind of, the second and third largest central banks are still implementing kind of monetary policy gone mad, while the Fed's tightening. So you're seeing the dollar index, which is, again, just dollar relative to other fiats, mainly the euro and the yen, is soaring, showing dollar strength. And traditionally, just if we go back to the history of this kind of this global monetary system, global monetary order of the dollar, it's basically post Bretton Woods, or if you want to look at it post Nixon shock, right, when it's pure free float fiat. Periods of dollar strength have coincided with large global recessions, and there's a reason for that. It's because there's so much dollar denominated debt out there. So now we're seeing that relative dollar strength, and even though the dollar is materially weakening against commodities, real goods and services, it's strengthening against other currencies, and this is kind of where you see like large debt crises emerge, right? So any emerging market, whether it's a European company or just kind of foreign entities, right? If they have dollar denominated debt, they have to sell dollar assets, and that could be treasuries, that could be U.S. equities, that could be Bitcoin, even, right? Like anything that's got a dollar exchange rate, they have to sell those assets to cover their dollar liabilities. You're essentially seeing like a short squeeze start to play out on the dollar itself. So that's why dollar strength coincides with recessions, and oftentimes, just with how much dollar debt is out there, and the crazy thing is it's not quantifiable. There's so much. It's called like euro dollars, right? Nobody knows the size of the euro dollar market. Nobody knows how much actual dollar debt is out there. It's very opaque, and so we can see these really scary moments where the dollar just screams higher and risk sells off. And actually, if we look back to like say March of 2020, you saw like the largest market in the world, the treasury market, it was illiquid. It went no bid on one of the securities, because there were so many foreigners that were selling treasuries to cover that dollar short position, right? Dollar short meaning just dollar denominated debt. So like these are like big picture issues here, but this is what a strong dollar. Why pay attention to the Dixie at all? This is why. It's because we have these huge issues that have built up across decades, that are systemic.
I want to quickly go back to the chart of the Dixie, Chris, if you don't mind pulling that up. And everyone who's tuning in on Twitter Spaces, just a reminder, we have pinned to the top. You can pop on over to YouTube where you can actually see our pretty faces and the chart that I'm referencing right now. We're speculating for a moment, so bear with me, Dylan, but are your expectations that the Dixie has peaked, or is there still room for it to continue to rip higher? Historically, it looks like, the peak of 2002 or the peak in 1985 would imply we still have a good amount of runway still to go, but there could also just be an argument to be made that each peak has muted itself and become less and less severe. So curious if you think the Dixie has peaked or what those expectations may be.
Yeah, I mean, okay, like I'm not a foreign currency trader. Like I'm not, I'm not trading dollar yen, dollar euro. But just kind of as an outside observer of these markets, and just like looking at the structural issues of these other markets. Never mind the fact that the Fed's saying, "Hey, we're tightening," while these other central banks are saying, we're still printing, we're still monetizing debt. The problem of these countries being net importers of energy, the structural energy deficit that the world is experiencing. Just today, this morning, Russia's like Gazprom said, hey, we're not we're not going to be sending Germany any more gas, right? So there's Germany, Europe's factory, and kind of like the biggest driver of the European economy, has a huge energy deficit that can't be just fixed with another kind of band-aid, right? There's no easy way to fix this. So the weakness that you're seeing in the euro, the weakness that you're seeing with other currencies relative to the dollar, never mind the fact that the dollar is kind of strengthening as the Fed is supposedly going to try to roll back and lower its balance sheet. These dynamics are unchanged. So we're seeing a little bit of a relief today. The Dixie's down, I think, around 1%, which is like these moves that we're seeing in currency markets are really, really big. Like these are huge moves. But I don't think it's stopped, right? We actually, I think if you want to go to Bitcoin Magazine Pro, I'm trying to find it on my Twitter feed right now to link it. But we talked last week a little bit about kind of the Plaza Accord in 1980s. And this is following kind of Paul Volcker raising interest rates 20%. Kind of reining in that domestic inflation that was the United States experienced in the 70s, trying to stop the stagflationary environment. And you saw on the back of that, the dollar strengthened significantly against a basket of other currencies. And so the world came together because as the U.S. kind of as the dollar screamed higher, the U.S. started to have a huge deficit, a huge current account deficit. And so the world came together and was like, hey, we got to fix this. This is not ideal. This is the kind of the classic Trifinus dilemma, right? As the dollar gains strength, the U.S. just buys up the world's stuff, and this is like a structural issue. But this is we're still seeing this stuff today. The world, if the dollar strengthens too much against these other currencies, big problems arise. And so the Plaza Accord was essentially all these world leaders coming together and saying, hey, we need to actually materially weaken the dollar and do something about this, because the global economy can't function this way. And so maybe we see some sort of Plaza Accord 2.0, whether it's explicitly or implicitly. But the longer that the dollar's up here, or the higher it goes, the more and more problems, whether it's under the surface or not, that the global economy will face.
I want to pop on over to slide 5, because knowing me, I'm misinterpreting this. This is the U.S. balance on current account percent of GDP. Walk us through what you're seeing here.
Yeah, so current account deficit or surplus, it's basically how much you export or import. And so if you kind of normalize it against the country's GDP, and this is for the U.S., right? But you're seeing essentially the U.S. being the world reserve currency, and this is something that Robert Trifin saw in the 60s. It's like anybody that's the world reserve currency, any country, is going to have to basically run deficits to supply the world with liquidity. And if you don't run deficits, then the world will face a recession. And so he saw this. Robert Trifin, an economist, he saw this in the 60s. But essentially, if you look at periods of significant dollar strength, this problem gets a lot worse. And so now you're kind of seeing our current account deficit. The strong dollar actually, while it's kind of over a short term, can be a good thing, as the U.S. can buy up everyone else's exports and buy the world's goods for cheap. It hollows out the kind of the U.S. domestic manufacturing base, and leads to kind of a hyper financialization of our economy, and actually lets foreigners, because we're supplying all of our dollars to the rest of the world and going into debt. It allows foreigners to scoop up all of our kind of domestic assets. So this is kind of the long-term problem of the dollar as a world reserve currency, and why over the short term it may be a good thing, because your local currency, the U.S., domestically, the dollar is a world currency, is a unit of account. It's a good thing over the short term, but over the long term, it kind of sows the seeds for these really, really big structural issues that continue to get worse over time. And so right now it's like 4.5% of our GDP is run as a deficit, our current account deficit. We import that much more than we export, and over time that continues to kind of worsen, as the chart shows.
So it sounds like, based on this chart and what we're seeing, we in the US are having a harder and harder time getting foreign nationals to buy what our goods are. Sounds very, very promising for the future of our economy and the dollar. Um, I want to pop on over to slide number 7 because actually you sent a tweet out and put this chart on my radar last week, Dylan, just almost mocking what is actually happening based on what the Fed is trying to tell people and the results of the CPI print. This red yield below inflation zone has now drastically spread. Why should anyone be concerned about this? Like, what are you seeing?
Yeah, I mean, this is for anyone that's not looking at the chart. It's just U.S. CPI year over year and the 10-year Treasury yield. And what it's meant to show is kind of since 1981, since interest rates topped and Volcker got inflation under control. There's been this 40-year secular trend of real yield bull market in bonds. So inflation was below bond yields, and if you have obviously like the long dated debt like bonds, not treasury notes or treasury bills. As the yields go down due to the duration of that debt, the value of that debt continues to rise. So you saw this huge secular bond bull market from 1980s to 1981 to really 2020 or 2021. I think in 2020 was the year that the real bond bull market ended, just based on inflation and where bond yields are. And so now, we're kind of seeing whether it's, some people, there's still bond bulls out there that think that this is just kind of a deviation. But I'm of the opinion that we've kind of seen the top of the real bull market in bonds. And so now, whether, the treasury, 10-year treasury is floating around 3%. I don't know what it is exactly off the top of my head. Year over year inflation is at 9%. Again, even if that comes back in to say 4%, 5%, you still have we're still witnessing financial repression where interest rates need to be materially lower than inflation to kind of erode the real value of this debt. Federal debt to GDP is over 100%. You have debt problems all over the world. And so as a fixed income holder, you're kind of, you can speculate on bonds, right? And if interest rates go lower, then you can get a capital gain on those bonds. But just kind of looking at debt as an asset class, post 2020, post COVID, potentially kind of seeing this huge trend of globalization that we've seen over the last 4 or 5 decades, but really over the last few decades with the rise of China and kind of exporting all this labor to emerging markets. We saw this huge disinflationary period, which now a lot smarter people than myself have said, hey, this is all reversing. The work of like Peter Zion, Lynn Alden has written a bunch about it. If we see this period of globalization, where everything got cheaper, labor, goods and services, all this stuff got tremendously cheap, and it's now reversing, and you're seeing a lot of nations kind of become protectionists with their trade and with their exports. Then this period of kind of inflation below yields is dead, right? And so for a fixed income holder, you kind of have to question, your long-term allocation to the asset class, and wonder what your real returns are going to be over the next decade or two.
Neither of us are experts in this space, but I just love your opinion as someone who's spent far more time than I have really dissecting and looking at these things. Chris, if you could pull that chart back up, I think something that I find really interesting on this is during the 2007, 2008 financial crisis, you actually see the CPI print get negative. And we had a deflationary period for some time that gave the yields this appearance of being very strong for a little bit of time. Why have you, just in your research and the time you spent looking at these types of markets, why have we not seen that yet? Or will we see something like that materialize if and when more bonds start to deteriorate?
Yeah, I don't think it's a bond market. I don't think it's a bond market phenomenon. I think basically you saw a deflationary bust in the Great Financial Crisis, and so that's certainly possible. I think maybe for a brief period of time, a couple months out, say, if you just look at a lot of the commodity prices, the year-over-year charts, it's certainly possible to get kind of a quick deflationary impulse or a negative year-over-year CPI reading. I certainly don't think it's likely over the short term. But yeah, that'd be kind of that would be something where the Fed would come in, and that's deflation is certainly it's not something that's good for a credit-based monetary system. And so that's why they kind of always target low inflation numbers. I mean, 2% is very arbitrary, but in a fiat credit system, deflationary busts are deadly, right? So that's why it's horrible for the economy, and that's why in general when people talk about Bitcoin, this is kind of a side tangent, but you say people will say deflationary money can't work, and they're thinking more so of kind of credit contraction in a fractional based monetary system, and not technological deflation reducing prices, which are two different things in my opinion. And I think the fractional reserve credit contraction is what can oftentimes lead to this CPI going year over year going negative, right? Imagine it like what we just saw in the Bitcoin space, right? Or the crypto space broadly, where all these promises and all this unsecured credit blew up. We have no lender of last resort, so exchange rates tank. Say just kind of map that out to the great financial crisis, where it's not Bitcoin or crypto markets. It's housing and mortgage-backed securities and the banking system, right? You see this huge deflationary impulse and all this fractional reserve promises collapsing on each other, and all these asset prices tanking, and you see demand for goods and services fall, and so prices on a year-over-year basis contract, right? So the government comes in and injects the system with a bunch of more liquidity to keep it all propped up. In Bitcoin, we don't have that lender of last resort, but that's the kind of the ultimatum of a fiat monetary base or fiat monetary system, is that when you see the kind of the fractional house of cards start to crumble, they come back in to try to prop it back up, because that's kind of a reflexive doom loop when that starts to take place. And so the Fed, I think, for the longest time wanted inflation. They didn't want inflation this high, but a year over year negative CPI is certainly not something that they want either. And I think arguably you could say it's actually probably worse from what they're trying to achieve.
So you've now let's go down the Bitcoin of it all. As everyone who is listening in on Twitter Spaces should be aware, if they're not, Bitcoin is in a bear market. The global economy is in a bear market, and Bitcoin has never really been alive during a global recession. We are not technically there, and by technically, I just mean the powers that get to determine whether or not we're in a recession have just not officially come out and said that. I want to just, me, I like to speculate. I know how much you don't like it. Just bear with me. You're on for the next 20 minutes, so you're kind of stuck. Sorry, Dylan. Should the reading come out in the next, I believe it's next week, we'll get Q2's GDP reading. And should we get a negative GDP reading for the second quarter, that'll be 2 successive quarters, i.e. a technical recession will be triggered. Do you think that the market is going to be surprised by that? And I'm talking the general market first, and then secondarily, do you think Bitcoin will be surprised by that? And by that, I mean the price of Bitcoin.
No, I mean, I don't think the technical definition matters. I think just I am of the opinion that, and it certainly would love to be proven wrong here as a a large holder of Bitcoin, but I don't think that the bottom is in, and maybe maybe that's 17.5 or whatever it was for Bitcoin is a generational low, and would love for that to be the case. Certainly, there was an absolute truckload of forced selling that took place on the back of the Three Arrows Capital liquidation and all the the counterparty risk that resulted from it. And before that, Luna as well, right? Just like hundreds of thousands of Bitcoin were puked up in this kind of event. But if you just kind of take a step back and look at Bitcoin as just kind of another asset riding the liquidity tide, I think what we've seen since November, or maybe if you look at like the S&P since like January, since the market's topped, what you've seen is that the drawdown, the bear market in equities has been about duration, right? So you've seen yields soar, And because of that, the duration assets, which Bitcoin is despite having no cash flow, is paradoxically treated as a long duration asset. Right, so bonds, equities, specifically tech, right? As yields have risen, the discounted kind of cash flow, or the value of these equities, as the yields have risen, as the risk-free rate has soared, the kind of the future, or the valuations of these companies and or these assets have collapsed. You've seen, like I think Treasury bonds had their worst start of the year in recorded history since like the 1800s, which is somewhat of a crazy stat, right? So that's like the first leg of this bear market. And I kind of was speculating and saying, hey, like I think if this is to get materially worse, if we are amidst the recession, if the Fed continues to hike, and we see 9-10% inflation year over year, consumers are really starting to feel it in their pockets. You're seeing European, that the Eurozone is getting decimated because of energy, right? We could expect or should expect some form of earnings, right, recession. So we've seen the duration part of the decline get really rapidly priced in, and I think for the most part that's done, right? Not talking about Bitcoin, but equity markets specifically. The next kind of leg, I would suspect, if we are in a true recession and a true bear market, and again, could be wrong here, and the market's been chopping around for a month as people are trying to price all of this in, but traditionally, what you would expect next is for the kind of the earnings recession to be priced in. So we've seen the duration, but you would expect that the EPS revisions start to go lower, and if we are kind of seeing actual quantitative tightening, you're going to see credit risk start to get priced into both bonds, corporate bonds, and to equities. And so when I think of Bitcoin as just kind of another asset riding the liquidity tide, even though there is kind of its own exogenous variables, there's Bitcoin native derivative markets, and certainly kind of the bounce we've seen. Bitcoin's trading at like 21.6 right now, 21.7. There's derivative market dislocations that can get worked out, where Bitcoin's been basically chopping around, and it's just derivative markets that have been sending it from 19 to 22 and back, ping pong back and forth for the last month or two. But if we are truly kind of in this global recession, potentially depression, right? When you just kind of quantify the energy deficit, there's a whole lot of pain that's being felt out there. Then I think the next leg lower for equities, and the next kind of catalyst for risk off, is that you see these earnings revisions really start to get hit, and you're seeing like people a lot smarter than myself, a lot more successful than myself, like Michael Burry, say that as well. Right, he's saying, hey, the first leg was about duration, and that was priced in very rapidly. But this bear market isn't over, and really, you haven't even seen the start of these earning downgrades in equity markets. And so, Bitcoin obviously seen a ton of forced selling. Derivative markets, you saw a huge rise in open interest in BTC and ETH. But really, and so you're seeing like that tells me a lot of people came in late and short hedged near the lows, which is good thing, right? Late shorts, are buyers eventually, but big but really what you have to look out for is if there's another leg lower in equities, it's highly unlikely that Bitcoin just magically is isolated and all of a sudden in a vacuum, and not kind of tied in as a beta asset like it's been for the last 6 to 8 months, or really, since March of 2020. It's kind of just a higher beta asset to the to the liquidity tide of the central bank monetary policy, and that's not necessarily a bad thing. I think that's actually a pretty natural progression, and that's kind of always how Bitcoin is going to monetize. But that's just my opinion. Someone commented depression now. Boy, oh boy. I don't know about depression, but it's certainly not looking good.
I mean, I think the powers that be may try to avoid the word depression for as long as humanly possible until we're so stuck deep in it, if we ever do reach that point. Look, I love throwing out terms like bear market because I'm a smooth brain trader like that. In this short-term window and the pullback that we've seen in Bitcoin, do you think that Bitcoin is in a bear market right now, or do you think this could be a moment where we're going to start to see that separation from the general market.
Q, we're 75% off the highs, my brother. This certainly isn't a bull market.
Not with
Yeah,
that
I mean,
attitude.
yeah. I mean, if this is the lows, then great, and I'll happily, ride that up. But I don't think we're out of the woods yet. Would be happy to be wrong, but I mean, you're seeing like a lot of kind of under the surface accumulation, right? But Bitcoin is like, as an absolutely scarce asset, and very inelastic, right? It's supply inelastic relative to demand. It's only a couple 100,000 Bitcoin can send the market up or down, right? So price is set at the margin, and if you just think about marginal buyers versus marginal sellers, obviously the last 6 months have brought a ton of just indiscriminate selling. But when you're looking at the marginal buyer, the plebs are certainly buying, but if you think about the average pleb or the average market participant that has no Bitcoin exposure, traditional legacy funds are risk off. They're risk adverse, and they certainly don't want to be speculating on an 80 vol asset. Maybe a little bit of exposure here or there, dipping their toe in, right? Legacy participants. I think with the new Basel requirements, or the new Basel, what is it called? Regulations. Banks can have 1% of their assets in Bitcoin now, which is great. I don't expect banks to just start aping into Bitcoin right away, but that's good news. The kind of the gap earnings accounting, the gap accounting for corporates is still very is just not ideal, right? So mark to market losses, but not mark to market gains. So if you buy Bitcoin at 20K and it goes to 10K, you have to take a hit on your earnings, like you've seen that with MicroStrategy. So that's still not ideal. And just in general, like I've said this on previous streams, and not to be pessimistic, but in the crypto space broadly, and Bitcoin's obviously not isolated from it, this last 2.5 months has been a huge black eye. And so really kind of any participants, serious participants that would want to get involved, have a whole lot to kind of sort through following this aftermath. And there's kind of a lot of just opaqueness that people maybe previously didn't think was out there. So I think obviously Bitcoin will get to the other side of this, and it's still a legitimate macro asset. But just in terms of the start of a new bull market coming forth, and all time highs by whenever, I think people should just taper their expectations a little bit, because we still have some kind of clunkiness to sort through from the macro perspective, and also just from a regulatory perspective. Like I'm not one to call for regulations, and I certainly don't like big government, but just in terms of sophisticated market participants getting involved in this space, the last 2 months have certainly not been, advantageous to the effort there.
Wait, but are you saying that is related to regulation, and that regulation would help there?
I mean, I'm a little conflicted, because part of the anarcho-capitalist libertarian in me says abolish the SEC. I'm not actually calling for abolishing the SEC, but I do have that libertarian kind of free market mindset. But at the same time, you have legitimate fraudsters like Celsius and Alex Mashinsky, and it looks like what a lot of the Three Arrows stuff, and the whole Luna debacle, and whether that's a legitimate, honest effort at something unique or not is another debate. But just all of this has kind of, and also like the kind of the dollar banks, right, that weren't actually these kind of digital banks that weren't actually banks, and they were just aping the treasuries into UST, right? All of this stuff is basically begging regulators to come in and enforce with a more heavy hand, right? So I don't know if it would have stopped it or not. I don't know if the SEC didn't do its job good enough. Like I certainly am not calling for Gary Gensler to regulate more, but I just think that it would be foolish to think that more regulation isn't coming on the other side of the craziness of the last 2 months, unfortunately or fortunately.
Okay, so we're going to abolish the SEC. What about the Fed? You want to get rid of the Fed?
I think eventually, I expect Bitcoin to outlast the Fed, but we're not there yet. It's just that's the reality. I mean, you can certainly abolish the Fed with your own full node, and audit your monetary policy. But in terms of the Bitcoin exchange rate, that is most definitely not isolated from the actions of the Fed, and it would be foolish to think otherwise.
So I want to show on slide number 10 the Bitcoin and Dixie year over year change chart. This I found super, super fascinating, where it almost seemed as though the peaks in Bitcoin when it was reaching all times highs was actually correlated with when the Dixie was making new lows. Let's talk a little bit about that. What does that actually mean? And could the value of Bitcoin really be derived almost in the same way where, as earlier we talked about the Dixie, it's not necessarily the dollar was getting stronger. It was just all these other currencies that were measured against the dollar was getting weaker in the same way. The dollar, which is all of us are in the US and Americans, so excuse and forgive me to any of our foreigner viewers and guests. This reads to me like the Bitcoin price was actually driven more by dollar weakness than anything else. Is that a fair conclusion?
No, I mean, I wouldn't say that. I mean, obviously, Bitcoin has its own kind of adoption cycles and waves, but I think certainly the cycles and the kind of the monetization bubbles, if you will, of Bitcoin are aided by easy credit and kind of these credit cycles. And so dollar weakness is kind of traditionally, or if you just look at like the past decade or so, has been accompanied with these kind of upswings in growth and credit cycles and easy monetary policy. And so kind of when money's easy, when money's cheap, you're going to see, and basically that's, it's just like liquidity is very available. Bitcoin crypto sees kind of a huge upswing and kind of a new, a new cycle, right? And so, and when conversely, when the dollar is strengthening and you see global liquidity pulling back, and a deceleration of credit growth or even an outright contraction of credit growth, you're going to see stuff like crypto, like Bitcoin, take a big hit, right? So if you look at, I like to just like the last 2 years, because I think Bitcoin is, even though it's still very immature, I think it's matured a lot more than its 2015, 2016, 2017 cycle. If you look at the last 2 years of Dixie and BTC and inverse the charts and throw BTC in log scale just to see a little better, it's like pretty similar chart. And so I think that's certainly telling. And obviously, the dollar can strengthen or weaken, and those foreign currencies can as well. There's a bunch of variables there, but the dollar rules all, which is why it's such a significant chart and why I pay attention to it.
So the dollar will reign supreme for some time. What are some events that you are keeping an eye on that will further weaken the dollar?
Personally, I'm of the opinion, and this is, I'm not expecting an imminent pivot in monetary policy. I think, anybody that's kind of, if you've been expecting a pivot every month of 2020, then you've gotten your shirt ripped off. I mean, long-term investors are, unbothered. And I think that the long-term investment thesis of BTC is completely unchanged and, potentially even strengthened through all of this craziness. But really, I'm of the opinion that this and at what level and at what scale is anybody's guess. I certainly don't know, but I'm of the opinion that all of this craziness leads inevitably to the Fed turning to yield curve control in some form. So whether that's monetizing the treasuries at 3% or 2% or 0%. I mean, we've seen interest rate policy, as a tool be used by the Fed until the great financial crisis, where quantitative easing became the primary tool. Now, post COVID, they, QE infinity, they monetize corporate debt. Inflation's raging, so they're having to try to walk that back. But I think inevitably, whether it's something in the Eurodollar system, whether it's something in international markets, maybe the legacy or the banking system, although that's from what I see and from what I hear from other smart people, is a lot stronger than the great financial crisis. I think inevitably that the Fed, just due to the kind of the size of our of the U.S. debt load, the size of the Eurodollar system, and just the cost of kind of rolling this debt over in, and just the sheer size of the U.S. entitlements and kind of fiscal obligations, the Fed needs to to monetize the U.S. debt, especially also if we're talking about dollar strength. The more that the dollar strengthens, the more that again that foreigners have to sell dollar-denominated assets, of which the largest of those asset buckets is U.S. Treasuries, is U.S. debt, right? So the more that the Fed tightens, paradoxically, the more that they are going to have to pick up the slack from kind of buying the U.S. debt, because foreigners are selling it off to cover their debt loads in dollars, right? So the U.S. kind of fiscal outlook and the debt burden is in a worse spot that the stronger that the dollar becomes. So I think I'm kind of the opinion that the Fed will obviously pivot if that wasn't implied already. But I think the end game here is yield curve control, similar to what the ECB and the BOJ are doing, whether that's implicitly or explicitly. The U.S. is going to in some form, and it's going to be some weird form of acronym, and it's going to be some obscure facility that sounds super complicated and complex, but it's going to be some form of debt monetization, and it's going to be another form of money printer go burr. And I think that's when the case for Bitcoin, an absolutely scarce monetary asset that's with no counterparty risk is going to once again shine. We're not there yet, but I think that's what's coming, and that could be 6 months, 12 months, 18 months. I really don't know.
Or according to the chart we were looking at, the euro dollar curve, it'll probably reverse sometime around December of 2022 and start changing in 2023. But what do I know? I want to go over open interest with you before I let you go back to doing what you do best. Slide 11, and this is the middle chart, the middle and the top chart in particular, where you've shown an arrow pointing up. Can you just touch on what you're seeing, what you're paying attention to here?
Yeah, I mean, Bitcoin's been in a range. It's like 22.5 to I mean, the lows were like 17.5, but 19, 18.5. And then in that range, we've seen open interest like skyrocket. So the lows were pretty heavily shorted. You can see that with the funding rate, but I kind of expect whatever way equities go, Bitcoin is going to we're consolidating in this range, but over the next, say, month or two, equities are also kind of trading in a range. Whatever way those go, you see just such a massive buildup of open interest. And again, like for every short, there's a long. So if there's around 260,000 BTC worth of stablecoin margin open interest, those are just agreements to buy and sell, and buyers and sellers met. So there's always an equal amount of shorts and longs. But if unlike spot Bitcoin, where you can just lock Bitcoin away in cold storage and never sell it again, open interest, a derivative contract, a futures contract, if you buy a futures contract, you eventually have to sell it, especially for like a perp, right? For a perpetual futures contract, what we're talking about in particular. And if you short, you eventually have to cover. There's no way you can like say you could short dollars, by selling dollars for BTC, which is not technically shorting, but you could sell dollars for BTC and never cover, right? But with a derivative contract, you always have to exit your position. So there's just been a huge buildup of open interest. You're just seeing like stablecoin margin open interest soar to all-time high levels, especially as a percentage of market cap. And so I kind of expect over the next month or two, while we're still chopping around this range, right? Like the range high is at 22.5, 22.6 today, got invalidated pretty hard. Whatever way equities go next, in my opinion, you're going to see a pretty violent move from BTC, whether that's higher or lower, because of just how much open interest has built up in this range over the last 2 months, a lot over the last month. And so, I mean, this is just like obviously more price action technical talk, but that's kind of what I gather from all this OI buildup, is that whenever the true range is broken, and it's probably going to be as a result of equity market or legacy market volatility, I think that's where you see a massive move, and it could be lower, and it potentially could be higher as well, which would certainly not be a bad thing for us BTC holders. But that's what I'm looking at.
All right, my final question for you is, are you actually bullish or bearish then?
I mean, I'm long-term bullish. I'm not too bullish over the next, whatever, a couple weeks, months, maybe quarter. So I still think there's downside. I do have some cash I, mostly from shorting altcoins over the last couple months here, but I'm waiting to deploy that. So, if the lows are in, great. I got to purchase in at 17.8 and would happy for that to be marked the bottom. But I think that, we potentially have some more downside here. So,
Dylan, it's always a pleasure getting to hear your perspective. And of course, nothing said here should be deemed as financial advice. Everyone should be going and doing their own due diligence. If you listen to a couple talking heads online or on Twitter, you're a fucking idiot who deserves to get wrecked. I don't make the rules, I just share them. Dylan, do you mind just sharing with everyone Bitcoin Magazine Pro? I mean, we pretty much have gone over the latest issue you guys released on Friday. So do you want to just share a little bit more about maybe what you're cooking up?
Yeah, sure. Most of what we talked about today is kind of just running through previous issues of Bitcoin Magazine Pro, which is a Bitcoin focused newsletter, obviously by the name. But we like to cover all the kind of the current happenings in global macro, in equity markets. We cover Bitcoin mining with particular focus about once a week or so. So yeah, I mean, we put out free issues. We have a paid tier as well. But Sam and I, Sam Rule, who's out today with some family stuff, but we're kind of the engine behind this, and we have a great team supporting us. So check that out. The link is in my bio. But we're putting out, for the most part, daily content, kind of around all this stuff. So if you like to talk today, if you liked what you saw, if you're watching on YouTube, then give it a check out. And appreciate everyone that tuned in.
I cannot stress how much signal comes out of this newsletter, how much I learn on a regular basis by subscribing. There's a free tier. It costs you nothing but your time, and your time will be well spent by reading the words that Dylan and Sam and their team put together. So highly recommend, if you are not already subscribed, to pop on over and subscribe to the free tier. It'll start there. And of course, just a reminder to everyone listening, both on YouTube, on Twitter, Bitcoin Amsterdam is coming up. Ticket prices will be going up on Friday, so be sure to lock it in. I am deep into the negotiations of trying to convince everyone at Bitcoin Mags. Okay, cool. CK is out of the spaces. I am really trying hard to be able to smoke weed with you guys at Bitcoin Amsterdam. So buy your tickets, come, and we'll have a blast. It's going to be the first Bitcoin, or the biggest Bitcoin conference in all of Europe. Shoot us DMs with people you'd like to see talk. Shoot us DMs with people or events or things that you'd like to see happen there. Sound Money Fest will be going on in Amsterdam, of all places. Oh my God, I may never come back from that trip. Locking your tickets before ticket prices go up. And of course, that's a wrap. P, how's that sound as a wrap? We good?
Fantastic. Let's call it. We'll see y'all tomorrow. Same time, same place.